equipped than you walked in. Housekeeping. Here we go with housekeeping. The really important. Seriously. And as we drive into our first session, let's cover the housekeeping items so everyone can settle in. All of our sessions will be held right here in the Owens Ballroom. So you don't need to wander around and look for a room and try to find a map. You just come right here for the next 3 days. This is home base. Restrooms can be found on either the left side or the right side as you exit the ballroom. And seriously, they are right there. Restrooms either way. Coffee, tea, and soda are available in the room just next door, which is to my right here at the podium, and your left as the audience, right over there. Help yourselves throughout the day. And this is a big one. So everybody, please listen up. All of our sessions are being recorded, and we have a virtual audience joining us for the entire conference. That means if you have a question or a comment during the session, even if you think your voice is loud enough that you don't need a mic, they can't hear you at home. And then they miss out on a big piece of information. We want them to get all of the information that you're getting. So you will find a handheld mic at each table. So you don't have to go anywhere. You don't have to raise your hand. Just grab it, ask your question, and put it back. Because if you don't use the mic, they can't hear your question. For our virtual attendees, you are absolutely welcome to participate as well. You can raise your hand and ask questions during any session. Kyle and Zach, who are running our AV in the back of our room, will also be moderating for the virtual audience. So they will make sure your questions are answered. I also want to make sure you know who to go to if you need anything this week. Kyle and Zach are in the back of the room. I think it looks like it's just Kyle right now, and handling all of our AV and virtual moderation. And he already gave us a wave. That's Kyle. And Deanna and Derek will be at the registration table throughout the conference. If you have questions about anything at all, whether it's CPE, logistics, or where to find the best hiking trail, they are your people. Don't hesitate to ask. And if you need the internet access, the Wi-Fi network is called Suncadia, and there's no password required. Just connect and you're good to go.
I get the most important topic, meals and breaks.
Yes.
But did anybody else have a faux pas with their name tag trying to make sure it was clipped in here and secure?
Oh, I did.
I'm told that Zach failed us. You're supposed to pop out the little holes in here. No wonder mine kept falling off. Just letting you know so you didn't fumble with yours like I did. But we got you covered on meals. Here's what to expect for the rest of the conference. This afternoon, we have breaks built into each session, so you'll have a chance to stretch your legs and refill your coffee. Tonight, there's a networking reception at 5:30, followed by a provided dinner at 6. Please plan to join us. It's a wonderful chance to connect with colleagues from across the state. Breakfast is provided Thursday and Friday mornings starting at 7:30, and lunch is provided on Thursday. Thursday, dinner is on your own, so you'll have a chance to explore the resort or head into Clay Elum. CPE credits.
CPE credits. Now for the important stuff. This conference qualifies for 14 instructional CPE hours across 3 days. Here's how CPE tracking works. If you're here in person, you will sign in at the registration table at the end of each day to claim your CPE credits for that day's session. So please make sure that you stop by the registration before you head out each evening. If you're joining us virtually, you'll receive a form by email at the end of the conference to claim your CPE credits. Keep an eye on your inbox after Friday's session wraps up. For everyone, please stay for the full duration of each session. Partial attendance may affect your credit.
On to sponsors. Before we look at the agenda, we want to take a moment to thank our conference sponsors. This event would not be possible without their support. A big thank you to Modus Technology and Workday for sponsoring this year's finance conference. They both have tables set up here, so please make it a point to stop by and say hello during the breaks this afternoon. They are great partners to county government, and they would love to connect with you.
Oh,
agenda.
I think that's, you get to go more.
Me still. Now let me give you a quick snapshot of what's ahead for this afternoon. We're not wasting a single minute. Right after this welcome, we jump into our first session, which is the 2026 BARS and GASB updates, presented by Olivia Crouch and Stacy Tellers from the State Auditor's Office. If you work with BARS codes at all, and I know most of you do, this one is essential. After a quick break, Olivia and Stacy will be back for Foundations of Capital Assets, which is going to be a great refresher for everyone.
Then we've got a two-part session on audit updates and county resources with Brad White and Niles Kostick, also from SAO. This is your chance to hear directly from the audit team about what's changing and what resources are available to you. We'll wrap up the day's sessions at about 4:55, and Carolyn and I will come back for a few quick end-of-day announcements before we head into the evening.
One more thing before we get started. This conference is about more than just earning CPE hours, although those are nice to have. It's about building connections with people in this room and online who understand the work that you do every day. Look around, and for you virtual folks, think about who else you know is tuning in. These are your peers, your resources, and your support network. Take advantage of the breaks, the meals, and the networking time. Ask questions during sessions and share what's working in your county. That's where the real magic happens here.
Absolutely. Don't be afraid to ask any questions because there's no silly questions. So, and please don't be shy about coming up to either of us with questions, feedback, or just to say hello. If we don't know the answer, we'll pull back our speakers and we'll ask them to give us some insight, or as a group, or we can just kind of facilitate a one-on-one. All right, are we ready to get this conference started? Yay! That's what I like to hear. Without further ado, we invite Olivia Crouch and Stacy Tellers to the front for our first session, 2026 Bars and GASB Updates. Let's give them a warm welcome. We so appreciate their support. Thank you so much. Thank you. Thank you, Olivia.
I want to kick that over. All right. Talk into the microphone, everybody. Don't forget. And before we raise hands for this, we're going to ask the online audience to drop comments of if you're gap or cash so we can get a count, but I'll ask that in a minute. So you all prepare to have to raise your hands. Be interactive. I'm Stacy Tellers. I'm the local government support manager at the state auditor's office, and we got to spend 8 hours yesterday talking about bars and accounting, and I can't tell you how thrilled I am to do it again. It won't be 8 hours, it'll only be 2, but still, we delight in coming and giving training on bars and accounting, so thank you for having us again. Now, online crowd, did you put your comments in of gap and cash? We're gonna assume you're all gap if you don't put a comment in there. Okay, in the room, who's cash? I'm going to assume the rest of you are gap or you don't know, which we can look up if you don't know. The rest of you are gap? Gap? Okay, good. Yes.
It looks like online we've got 2 gaps and 2 cash.
Ooh, okay. All right. So we're going to talk about some gap specific things. And we just want to make sure we had a good crowd of gaps. So Olivia knows how detailed to be or not be. We are going to talk about bars. Let me make sure this thing is not working. Hold on. All right, there we go. Get it going. All right, today, this hour, we're going to talk about just some reminders from the December 2025 update, which is applicable to your annual filing that you all have done already, right? Completed, hit submit. I know, you're like, it's the middle of March, Stacy. You are funny. Okay, well, good timing then, because we're going to give you some reminders about what you will need for your filing, which is due in May. We're going to talk about 2026, so things that you should be thinking about now, but don't panic because we know you're working on 25's financials. And then we're going to talk about the annual filing and some reminders for you. And then we were told you wanted to talk about unauditables, which is thrilling because that's my area of expertise. So you got the right person in the room for that. So to start off with 2025 bars reminders. So these are things that will need to be in your financial reporting that is due on May 30th, on or before. Before is always good. The first reminder is that we made some changes, some minor changes, or that seem minor but are huge. So in both the gap and cash manuals under our fund accounting and fund types section, we made one word change. And the difference of this word change is huge. So in bars and in accounting, should means must. Well, you are not required to use a special revenue fund. So when we had should be used to account for, it was telling you you had to use it, and that was never the intent. So we changed it to are used. You can use special revenue funds for these things, but it's not required. So we made this one word change. It's a huge impact in the word, but it was never our intent to require special revenue fund use. So just know that we made a one-word change that has huge impact. So if you thought you had to use a special revenue fund and didn't want to, you weren't required to do it. So the other thing we want to clarify is the number of funds, and just reminders is how many funds do you need versus how many funds should you report. We know a lot of governments use what's called managerial funds, and then they report all of those in their financials. And if you are a cash basis government, you probably notice that your C4 becomes 75 pages. And is that useful? Maybe not. So we really want to encourage everybody to look at their funds of what they're reporting. And with that, we have a new section on managerial accounting. So if you're looking at all the funds that you're reporting on the face of your financial statements, and you're like, wow, I can really get rid of a few of these funds. How do I do that? We have a new section on managerial funds. We have examples of how to roll up or merge funds together to eliminate intra-fund activity, so you're not over-reporting things like transfers and stuff between funds, and just some additional information on managerial fund use. So we really encourage everybody to look at the number of funds that they're reporting. And if you're GAAP, that also helps you if you make an ACFR in your combining statement sections to not have that section be so large if you merge funds together. All right, interfund loans. So interfund loans and other interfund activities, we want to remind everybody that Olivia recorded a video last year, actually two, there's one for GAAP and one for cash, that talks a lot about the different types of interfund activities and how to account and report them. So we want to encourage everybody to check out the sections. We refreshed them, and then that video. And that QR code will take it to your videos. But I just want to put out there that on the sao.wa.gov website, under bars and annual filing drop-down menu, there's a training and workshops. All of our recorded trainings are on the training and workshops page, and we add about 5 every year, so it's really grown. So I encourage you to check that out. Our favorite topic, equipment rental and revolving funds. This one is for cash. We want to let you know that in your section, your ER&R section in the cash manual, we actually added in some internal service fund guidance. GAAP had it. We cleaned up GAAP a little bit, but cash, we added it. It wasn't in there. And I actually think we were sending you to the GAAP manual. So we fixed that because you don't need to be in the GAAP manual. So we have refreshed that section, no major changes to it, but it looks different and it's cleaned up. So we encourage you to check that out if you have equipment rental and or revolving and rental replacement funds. And cash basis, a reminder, GAAP already has this in their notes. So cash, we want to remind you, you do have a note disclosure requirement if you have what is called short-term debt. So say in March, you get a loan for property tax coming in, I don't have it yet and I need money loan, and then you pay it back in November. That's a short-term debt and you're required to disclose that. So we want to give you a reminder that that note is out there and to please make sure you are disclosing short-term debt. We're hoping that everyone will cheer on this one, risk management, and it's specific the note disclosure. So we were noticing note disclosures for risk management growing and growing and growing, and some of them are like 8, 9, 10 pages. We don't need that much information unless you're a risk pool. So we have cleaned up this note and put in there what is required, and just highly encourage everybody to check out their risk disclosure notes and check out both the BARS manuals and make sure you're only providing what you need to provide. All right. Yes, question. Microphone. Look, I remembered. Yay.
Is it on? Yeah.
Yes.
Okay. So each year we're a member of the Washington County's risk pool, and we get note disclosures from the pool that we're supposed to incorporate in. Is that different than what you're talking about right there? The note disclosures
that
we
the
get
one
from
we
the
worked
pool?
with? Oh, darn. We
What's
worked
that?
with Endoris. They gave notes to their participants, and we worked with them to shorten their notes. We did not work directly with the other risk pools.
WCRP,
Yeah, but
okay.
I would definitely check what they're sending with what's actually required. I think their note is only like 2 pages, though,
Yeah,
right?
it's only a
It's
couple
really
pages.
small.
Yeah, it's not that big.
Yeah, so they may have a little bit extra than what's needed, but we were seeing notes be pages and
Okay.
pages. If anybody uses Endoris, we did work with them directly. They asked us to assist in fixing their note, so that SAO did work with them to clean up their note and make it shorter. Great question. Yes.
We be getting these slide presentations after?
Yes.
Thank you.
Thanks, Olivia. All right. So 2025. All right. Olivia's up. She's going to talk about the future.
Okay, so we'll talk about 2026 updates now. We're going to start with GASB 103. GASB 103 is a pretty big impact for all of our GAAP basis governments, but a very little impact for cash. So all of you cash folks can kind of cheer and be so happy you don't have to do anything here. But for our GAAP folks, GASB 103 is called the Financial Reporting Model Improvements. It affected a lot of different areas of your annual report. So your MD&A, major component unit presentation, budgetary comparison, big impact to the proprietary fund statements. So there's so many places it impacted. I'm not going to list every single bars page we updated. We updated like 40 of them to go through and make sure all of the GASB 103 stuff was incorporated. So I'll talk about some of the highlights for 103. First one is the MD&A. They're removing stuff out of it. You no longer have to talk about the budgetary variances in your management discussion and analysis. So yay, it's going to be a little bit shorter. You were always required to compare prior year information to current year information, but GASB 103 is really focused on you explaining why things changed. A lot of times you all are really good at telling us the percentage and amount that like something changed. So like, oh, tax revenue went up 10%. But what they really want you to say is why? Why did it go up 10%? Was there a new housing development, so you're collecting more property tax? Did you increase your tax rate? Like telling users why something changed is what we want to focus on. And there's also an emphasis on not duplicating information. So your MD&A has a section that talks about major capital assets. If you have a huge capital asset change, you would talk about it there. It's also going to have a pretty big impact on your financial results, which you talk about further up in the MD&A. Don't put the discussion in both places in the MD&A. Just talk about it once, and then the next time it comes up, just refer back to that other discussion. Major component units. For our GAAP folks, does anyone here report discrete component units? Okay, I'm not seeing any hands, so I won't spend a lot of time on this. You used to be allowed to present detailed information in the notes. They took that away. It now goes on the face of your financial statements. So we took away the note for major component units because you're not allowed to do that anymore. And we added a new bars page in there that talks about the requirements for major component units. So if you do have those, you can go to that bars page and find out more about it. Budgetary comparison. Okay, for our GAAP folks, who puts their budgetary comparison as a statement? A couple. And then do the rest of you put it in the RSI section? Okay, GASB is taking away your choice. You can no longer present it as a financial statement at the front of your report. You have to move it into the RSI section. They're also requiring that you put 2 variance columns on there. Most people already told us the variance between your budgeted amounts and your final results, but they're also requiring that you have a variance column from your original budget to your final budget. So that's something new that a lot of you will have to add in there. You're also going to have notes to the RSI, to your budgetary variance schedule, that talks about significant variances. So you get rid of it in the MD&A and you put it here in the RSI, which makes more sense because this is where you're actually reporting all of that information. Okay, proprietary funds, this is like the biggest impact for 103. So if you're a gap government with proprietary funds, I really recommend watching our video that we have. They're taking away your choice to define operating and non-operating revenues and expenses yourself. Right now, everybody gets to decide what's operating, what's non-operating, and you disclose it in your notes. GASB no longer lets you do that. They have defined it for us. And how they went about this was defining the non-operating revenues and expenses. So non-operating are subsidies received and provided. We'll talk more about subsidies in a second. Any contributions to endowments, anything that's related to financing or capital asset and inventory, and all of your investment income and expenses. All of that's non-operating, and you probably already report all of that as non-operating. So subsidy is really the thing that's new here. If it's not on this list, that means it's operating now. So things like lease revenue, maybe you reported that as non-operating before, now it's going to be operating for everybody. That also means we're changing some of our designation for our BARS codes. Right now, some of our codes we designate as operating or non-operating. So we're changing all of the codes in the 330 series, which is intergovernmental revenue, to non-operating. So it'll automatically default to non-operating in our system. Okay, so what are these subsidies? These are resources either your proprietary fund receives or provides to somebody else that's not related to providing a good or service to that party that you received money from. And it will keep fees lower than they otherwise would be. And then it includes all other transfers. So transfers in and out of your proprietary fund are now called subsidies. So examples of that would be pretty much all grants, right? If you get a grant from the federal government for your proprietary fund, you're not actually providing services to the federal government. You're using that to provide services to your citizens. And it helps you keep rates lower, right? If you get a grant to improve your water facility, you don't have to increase rates then to pay for that new water facility. So it has an impact on your rate there. Most other intergovernmental revenue is going to be a subsidy unless you're actually providing a service to them. So if you're providing like mechanic work to a neighboring city, that's still operating because you're providing them a service. Questions on subsidies? I think counties are pretty good at reporting grants and stuff as non-operating already. But if you go through and you look at your revenue that you're reporting as operating and you have questions like, ooh, do I need to change this? Please submit a help desk to us. We're trying to let governments know what things will be changing so they can look out for that. So with this new change, your proprietary funds will look a little bit different now. So we have this weird new category for non-capital subsidies, which is everything, all those subsidies we talked about that were for non-capital things. And then we have this just other non-operating revenues expenses. That's where everything else goes, including like capital contributions and anything related to like your capital stuff. Again, it's already reported as non-operating for most of you. It just kind of shifts a little bit where it's at in the statement. So what this means is for some of our proprietary funds that are heavily subsidized, they're probably going to be reporting an operating loss. So this is actually a big change for like our housing authorities that were reporting federal grants as operating revenue, and now they have to move it. So if you have a heavily subsidized proprietary fund, you might report an operating loss, and that's totally fine. They added this new subtotal, that's your operating stuff, plus your non-capital subsidies. Okay. So we have a video that goes into a little bit more detail about each of these changes. But as you're looking at your statements, if you have questions like, oh, what do I do with this? What do I need to change? Please reach out. We are happy to help you with that. Okay, terminology. This is one that affects both our GAAP and cash. So this is the tiny change for cash that I was talking about. We are changing special and extraordinary items to unusual or infrequent items. That's literally it. We're just changing the name. You use the code pretty much the exact same way. So unusual in nature, those are things that are abnormal or significantly different from what you normally do. Infrequent just means it's something that doesn't happen often and it's not reasonably expected to happen again in the future. Cash, we are adding these definitions of unusual and infrequent to the BARS manual for you so that way you can refer back to them. GAAP governments, you have access to the GASB codification that has these exact same definitions. We're keeping the same BARS codes for these unusual and frequent items, so you don't even have to change what codes you're already using. Only use this for really significant items, right? Things that are really weird, like really big impact to your financial statements. Because every time you use BARS code 385 or 585, we're going to look at your financial statements and expect to see a note disclosing that information, like what was unusual, what was weird, what happened. So cash governments, you actually always had a requirement to have a note disclosure for any special or extraordinary items, but it was buried in our other disclosure note. So we just pulled it out of there so it's easier to find. GAAP governments, you had an existing disclosure. We just updated it to align more with the new GASB. Okay, transportation benefits districts. Does any county have a TBD? Yeah, a couple, okay. So before, this was one page for GAAP and cash. And as you went through the page, it was like, this is for GAAP, this is for cash, this is for GAAP again. We just split the pages. So now GAAP has their own page, cash has their own page, and we updated some of the accounting guidance to align with GASB. And for cash, you don't have to look at all the GASB stuff anymore. So that's the main change here. We also talk about how to report an unassumed transportation district versus once you assume it and what that accounting is. So if you have a TBD that's unassumed and you're going to assume it, I would recommend checking out the updated page when we post it in December. So here's a lot of that accounting here, but I won't go through it since it doesn't impact a lot of you. But if you have questions on it, feel free to reach out. Okay, back to GAAP. This is actually kind of a part of our GASB 103 stuff. As we were going through all of our reporting pages, we noticed we had like 3 separate pages on reporting requirements. One was BARS, one was GAAP, and then the other was a summary of the 2 of them. And the summary of reporting requirements had a horrible matrix in it that nobody could read. So we're getting rid of all that. We are combining all 3 pages into 2 pages. So now we'll just have one page for all of your reporting requirements and then a separate page for financial reporting entity because that was hidden in one of those other pages up there. Okay, for GAAP governments, how many of you have a tax abatement note? Maybe you should. So, tax abatements, it's a reduction in your tax revenues from an agreement between one or more governments or an individual or entity. So you might enter into a tax abatement agreement with a taxpayer or somebody above you, like the state might enter into a tax abatement agreement that impacts your taxes. Those also need to be disclosed. So the way you would know whether or not the state has done that is going to the DOR website. They have a whole little spreadsheet that's dedicated to tax abatements, and it'll tell you if your county is affected by that. Question?
So that only applies to GAAP reporting?
Yes, cash governments don't have a tax abatement note.
Well, what do you call it when a server farm takes you to court and gets their taxes reduced for the past 3 years and you end up paying $200,000 back to them?
Great question. So if that's more of like a tax refund. If it's a really significant impact to your government, that might go under like our contingent liabilities note or our litigations note. So there will be another note disclosure for you to include that in there if it's something significant to your government.
Thank you.
Okay, capital asset notes, GAAP governments. The main change here, you have to list out each of your lease assets by major asset class. So are you leasing land? Are you leasing equipment? Are you leasing a building? All of that needs to go directly in the leases note. You used to have an option to put that detail in your lease note. GASB took that away. They want it all in the capital asset note. Along with the capital asset note, they want you to disclose if you have significant capital assets that are held for sale. You just continue reporting that in your normal asset class that it's already in. This is just an additional paragraph that you're going to add to your note to talk about that. And you would disclose things like what's the historical cost, the accumulated depreciation, and if you have debt related to that capital asset you're selling, you would tell us how much debt is still outstanding. We also have a GL code in our optional GL codes that was capital assets held for resale. We're removing that because you're not supposed to report those capital assets separately from your other assets anymore. Most governments, this won't impact you because most of you do not report capital assets held for sale separately. Cash. This is going to be a new note for you related to your capital outlays. So these last two columns here, the spent to date and remaining commitment, those were actually already required if you had a major project that was going to span a couple years. It was just buried in our other disclosures note. So what we're really doing is adding this spent in the current year column to it. And that amount that's spent in the current year should tie to your capital expenditures on the C4. The purpose of this note is to give people reading your financial statements a better idea of what your capital expenditures are. So for a lot of us, that's a really big dollar amount. So when you list these out, a small government might list like project 1, project 2. Counties, you are not small governments. That would be the worst note ever if you listed every individual project, right? So what we want you to do is use some professional judgment and group things together. So maybe you have one line item for roads, one line item for public safety or police, right? We just want the most major things to be listed separately and everything else can go in this other line. So think about the big things, like what would your citizens care about or bondholders care about, and list those separately, but everything else you can group together.
So Olivia, does this take the place then of the construction commitment note?
Yes.
It's just more formal now, whereas before we kind of, we gathered it and just put it in. Okay.
Yes, absolutely. So this came from the construction commitment note that was in other disclosures. We got rid of that and we pulled it out into its own note here. Yes. So the spent to date column, that's going to be the amount spent in the current year plus any amount spent in prior years. And remaining commitment is just what's left to spend on the project, which is typically like the contract amount that you haven't quite met yet.
So then you report for all funds, and so it will basically go to the far left to go all county funds that look for the 594, 595s to tie to that then.
Yes, all funds together. We don't want a separate table for each fund. That's too much. We also have a line in there for purchases because most of your purchases are like a one-time thing, right? If you like purchase a new fire truck or something, a lot of the times that's not going to have a remaining commitment because you purchased it. If you have some sort of huge contract to purchase like a fleet of police cars over multiple years, maybe you do have a remaining commitment, but that's probably pretty rare. So this is a new note. So if you have questions on it, now's the time to reach out because we're drafting the instructions to it because it will involve quite a bit of professional judgment in deciding how much detail to put in there.
So I'm really sorry, but this is where my confusion usually happens in this conference. Is this for your 2025 report that we're doing now, or is this something we have to do for 26?
This is for 26.
Gotcha.
You don't have to worry about this now.
Okay. And I know you said that at the beginning, but then I tend to panic and then I'm like,
Yeah, no panic. This is not for this year right now. Technically, the construction commitment note is in there already. That part is required. It's in the other disclosures. But this piece about listing the current year spent to date, that's all new that you don't have to worry about yet. Yeah, if you look in the BARS manual right now as it is, that's your requirement for this year.
Would this also apply to regularly scheduled ER&R expenditures? So for example, if I know my sheriff's going to buy 5 cars every year in a 5-year rotation, and that's going to be $500,000 every year or whatever, is that here or is that somewhere else?
So the current amount spent in the year that you're coding to your capital expenditure, so that 594 code, that would absolutely go in this table in the spent to date. You don't have anything to put in the remaining commitment unless you've actually signed a contract with some vendor to purchase those. Okay, good news, we're removing some notes. The COVID-19 note, it's going away. Right now, it just tells you like, hey, if you have something that's really big, put it in this other note, and it links you to that other note. So we're just getting rid of the COVID-19 because you all know where to find the contingency and litigation note. It's just with all of your other notes. So only if you have something really big and unusual that's worth disclosing would you include that there. Most governments don't need a COVID-19 disclosure anymore. GAAP, you had this note called unique and unusual transactions, and it was just like a list of like some potential disclosures, but it was really incomplete. And we're not really sure why some things were listed and some things weren't listed. So we just got rid of that note. And we link you to the GASB codification, which has a more complete list of potential disclosures. But there's no way to provide a truly comprehensive list of all possible note disclosures. If there is something really big that impacts your financials or that people need to know about, you should put it in your notes, even if there's not a note template for it. Even GASB says that. Even if they don't have a note requirement for it, but it impacts your financial statements a lot, you have to make up a note to put in there to let people know what's going on. And that does involve some professional judgment, right? Think about what people care about. What do your citizens, bondholders care about? What's impacting your financial statements? Okay, cash counties. All of you have a C5. We're updating the BARS code shown on them, but there's literally no change to how you prepare it. Right now, we have all BARS codes listed like 310 through 3 whatever. Well, you don't report 310, 320 codes on your C5, right? You just have your fiduciary codes. So we're just updating what codes display on there. So when people look at your financial statements, they have a better idea of what's actually in there. But no real impact to you all. Cash, your long-term liability note. When compensated absences were new, we required you to have a table in your notes that gave us the beginning and ending balance and the changes. That's in your Schedule 9, right? We don't need it repeated in the notes, so we're getting rid of that table. People want that information, they'll look at your Schedule 9. Okay, the violation of finance-related legal provision that was in our other disclosure note, and it didn't have a lot of good examples for you in there of when you would use that. So we pulled it out into its own note so we could give you better instructions on when you might need something like this. So that's like budget violations, if you overspend your budget, if you have funds that have total ending cash that's negative, any grants or contracts or bond covenants that you didn't comply with, those types of things would go in this note.
Is there any threshold on what you would report there? For example, I think I remember one fund went over $500 in 1 year over their budgeted amount. So is there any de minimis factor here, or you do want to know $1 if it's over?
So for your budget violations, you're already going to have a budget note, right, that tells the budget and the actuals. So it's an option to talk about budget overages in that other note. And we explain that in the instructions to this note. So people will see it in your note. So I'd recommend at least putting something in there to talk about it, because people will want to know. But with all things, it does involve professional judgment. If it's a tiny amount, like a fund's over by $20, nobody's really, you don't need to talk about that, right? Like your notes are really to explain your overall activity and the things that are larger or that people care about. And people do tend to care about budget overages. Okay, BARS update resources. Every December, we update the BARS manual and we give you a list of literally every change we make. It's in the alerts and changes section of the manual. And I recommend looking at that list every year because it'll let you know what changed from the prior year. We have the 2025 information listed there now, which is what you're going to report to us in May. And all the stuff that I just talked about is for 26. So we'll update the BARS manual in December, and then you'll see a new page for 26 that has all of the stuff that I just went over. Okay. Any questions on 26 updates? Okay, I'll pass it back to Stacy.
All right. The Ledge did just end their session. We always, yay! I don't know how you all feel, but I was not asked for a lot of things on the filing side of the RCW table. So we always look at the laws that are finally passed and signed and just see if there is anything that impacts filing or BARS coding or anything like that. So anything that comes up over the summer from the legislative changes, they will be listed in that overview of changes page. Usually sometimes it's a new tax or something like that, so it requires a new code. We create the new filing year in July, and that's when we would add a new code. So we wouldn't even really know that we need it till July or August anyway. So just keep, this is the annual reminder to please download your updated chart of accounts approximately August 1st and December 15th of every year. Because that's when the charter accounts gets updated those 2 times, unless something drops from the feds in the middle of the year. All right, annual filing. So just a reminder, we get asked to unlock a lot, which is totally fine. And just know you have the power to unlock your annual report up until the time your audit team issues any type of audit report for that fiscal year. So if you have like a fraud and we have to do a fraud report for fiscal year 25, as soon as you file 25, it would lock 25, for example. That is when you have to reach out to the audit team and us and say, hey, can I have your permission to unlock it? This is what I'm changing. They do that to ensure that the data is not changing on an audited year that they need to be concerned about. So up until the time a report is issued, you can unlock, make your corrections, do whatever you need to do whenever you need to. But the second a report gets issued, you are not able to unlock it. And the question is all, how do I know? Well, the 2 boxes that are in a red square, one is blue unlock, which means you are able to unlock it. And if it's gray, it won't let you. So if it's gray, just reach out to your audit team and say, this is what I need. Can you help me? And they will forward that message to our filing team. But if it's blue, go for it. This was one of the legislative requirements several years ago. And then 2 years ago, the Ledge wanted more clear, defined items in the rural sales tax for public facility schedule. So it's called the Schedule 20. It was great. We worked really closely with Brad and our 2 county associations just to make sure that we were getting everything correct for what the legislative people were looking for. And so just a reminder, absolutely required by legislature, we are required to produce a summary report and publish it on our other data page on our website, and they go pull that down and their legislative aides do all kinds of stuff with it. So this schedule is really, really, really important for the counties that collect rural sales tax. So the Excel template that is on our templates page, it has lots of drop downs, and those drop downs are filled out with what we know is listed in the RCW as the documents that would be used to assign that money. So we got this approved by those legislature folks that these were the things that they were assuming, like a capital facilities plan, something like that. So they went through this and told us what they expect, what documents they expect to be approved for these monies to be spent. So this is why you might get into these drop downs and go, but that's not where it's at. You need to let us know and we'll work with you on which bucket you should pick, but these are the ones that are laid out in the RCW. So we have these drop downs. Please use the new templates every year. We always recommend pulling down the new templates, pulling down the correct categories for your projects, and really just double checking everything that you're doing to make sure that you're in alignment with the RCW reporting requirements. And this really helps the legislature. It was last year, I think it was, is when they extended the collection period. And that was because of the report that they got from us. They saw how the money was being used and felt justified in extending the collection. So it's really, really important that you guys fill this out as accurately as possible. There's some instructions for each of these buckets in the BARS manual and both the gap and cash manuals that tell you exactly what each of these buckets are for. So for example, in column H, the amount of sales and use tax spent on the project for this fiscal year, it's for this filing year, it's for 25 only. You only want what you spent in that fiscal year. And then we have the accumulative total for however the length of the project has been. So they look at all of that information. So we've updated the instructions to try to make it more clear. But again, if there's anything that you all feel like, hey, you could do better with the instructions on this, or we have this unique situation, what do I do with that? Please send us a help desk and our filing team will look at the template and we'll reach out to Brad if we need to and reach out to the legislators if we need to and say what else is needed on here, or hey, can we add this special document or whatever the question is. We will always do our best to make sure those instructions are clear. The last two buckets we get asked a lot. They're like, what do I do with this? The assumption of the estimated number of businesses created or retained because of the project, or the number of jobs created or retained, it generally doesn't change year to year, but it could. So if it does, that's totally fine. But usually it's same from year to year because the project is usually like, I'm doing this thing, we expect to create 500 jobs. So if that changes, go ahead and update it. But if it doesn't change, it should be the same number you reported last year.
So I had one question on this form. One of the things that's been less than clear in looking at the form is how we need to handle situations where we are using this sales tax to pay for debt service costs relating to projects that were done that were eligible uses of these monies. But in this form, it doesn't seem like it really, there's not a clear way to capture those debt service payments that these funds are being utilized for. Could you?
That's a great question. Yeah, with let me see, can I go back? So the debt service would have been the project itself would have been approved in one of the plans. So let's say it was a capital facilities plan in whatever year that plan was approved for. And in the language of those plans, it probably says something like, and including issuance of debt in order to fund the project. So you would want to use the year that the plan was approved with that approved language in it that you were going to probably issue debt to support the project. And what project, the category, what it was fulfilling. Is it a public facility? Is it some sort of qualifying provider project? So you want to plug that information in there. And then when you do the spending, so if you paid debt service, that would be current year debt service, and then the accumulative debt service to it, and it would just carry forward. And then there's an option, I need to go back, sorry. In detailed project description, I want to say it's 500 characters because we did up it from 250. That would be a good place to put in there that this includes the authorized the authorized repayment of debt from the original project proposal. And then that lets them know that the ongoing expenses related to the debt that funded the original project. This is a great question. And I will mental note, or actually I'll write it down when I go back and I'll get that to the filing team and we can get it updated in the instructions in December. All right. So just remember, if you're filling it out this year and you're like, oh, wait a second, please shoot me an email, send a help desk. We'll make a note of it and we'll continue to improve the instructions for you all. And thank you from the bottom of my heart for filling this out. And timely is wonderful because we can get it out to the legislature and they do look at it every year. So thank you very much for taking care of this. All right, this was added last year on your Schedule 09, where the first question is, do you have debt? And I believe for all of you, you don't even get a chance to say no because y'all have PERS plans. And so it defaults you to, yes, I have a Schedule 09 requirement because I have pension liabilities. But then there's a question that says, do you have a bond compliance requirement, which means you have to submit audited financial statements to the investors in your bond, usually through the EMA data port. And so we want you to say yes to that and then give us the date that your deadline is. Usually it's 9 months after a fiscal year ends. Some bond covenants are 7 months. I've seen one that is 6 months. So you want to check, you want to put your most restrictive date. Hopefully all of yours is in September because that would be nice. Put it all with the single audit deadline. So so you say yes, and then there's a drop-down box that has the dates, the month end of each month, and then there's one for other where if you have a special date, like say it's September 15th, then it lets you type that date in. And we just use that for information for your audit teams as we grow the database of data so they can know that you may have a requirement for audited financials that's different than our expectation. We assume at least September 30th if you have a single audit. So if you need something sooner, this just helps us try to help with the planning. All right. We removed the maturity and due date column on the Schedule 09. And so please make sure you're using the most updated Schedule 09 template. If you try to use the old template that has that field in it, it will not update correctly and you'll get a bunch of errors in the filing. So I want to save you that heartburn. Just download the new template. We highly recommend always, every year, going to the templates page and downloading all of the most updated templates. So it's a good reminder for that. We will be turning on the filing chat. So it's the little Insta chat. You get to talk to me this year, or Christy, or Zach. We will be monitoring the live chat. We will turn it on the first full week of April, and it'll be available from 8 to 4 all the way through Friday, May 29th. And I know we have a slide here. The deadline is May 30th, but that is a Saturday. Please don't work on Saturday. Do it on Friday. Actually, do it before. Do it like the week before. I encourage, but we will not be there Saturday. So you'll want to hit us up on Friday at least because we will not be there on the deadline. And then road and who in here and online is responsible for the road and street report? Seen a couple hands. Some of you are like, I've delegated that. Well, the good news is the road and street report, it's not required to be completed by the filing deadline. However, please note that any changes to your Schedule 01 automatically refresh the street and the road report because it pulls from your 01. So if you make any changes, you're going to have to go re-update that. So again, we highly encourage, if you complete it, to download it. So that way, if you have to make a change on your 01, you have all the information and it's just plug in the figures back in. So a reminder on that. And we do encourage you to do it as soon as possible after the deadline. WSACA starts pulling the data by mid-June, and then they need to file the report by the end of July, and they'll start calling you saying, hey, I need your data. So I encourage you not to wait too long after the deadline to complete it. How are we doing on time? Ooh, we're 3 minutes over. Well, we started a little bit late, so maybe we're not 3 minutes over. Okay, reminder, which we talked about a little bit earlier, our e-learnings, they are on our training and workshops page, tons of training, all kinds of topics. And if there's a topic we don't have that you want, let us know. We keep an ongoing list and we do about 5 a year that we try to add. Unauditables. So I don't know if you wanted to know anything specific about unauditables. And do you want us to we can carry this into the next, right? We could carry this into the next hour if you want to, because I don't want to rush it. Okay, Heidi's going to step in and tell me to stop talking.
No, I'm just saying that everybody can maybe get up and walk around a little bit,
Yes.
and then we will continue this
Yes.
session.
What time do you want to stack?
What time is it now? 1:59. 10 minutes.
Okay.
Is that 2:09? Let's say 2:10.
2:10.
But yeah, let's see here. We have a 10-minute break, so stretch your legs, grab a cup of coffee from the room next door, and be back by 2:10. Thanks, everybody. You guys, that was so awesome. That was so amazing. Okay, break's over. Break's over. Back to work, everybody.
Oh, it's on the other screen. Oh. Is it coming the right way? Nope. It's backwards. Is it open? Oh, it's locked. Yeah.
But I don't think they moved it to the thing, so I wonder if I can open it from here.
It's insane.
If you open it now, it should.
I'm just gonna rock out to the song. Oh, snacks. You gonna load them up?
Okay, folks, it looks like break is over and we're ready to start again. Thank you, Stacy and
Yeah.
Olivia.
All right, we got up the other PowerPoint too, because we'll have to switch between the PowerPoints. So to finish out the bar stuff, yeah, we can keep singing. I love that song. Keep playing. It's great. Me and a microphone, it's dangerous. Unauditables. So this was requested, and I will tell you that our perspective of unauditables is a couple of minutes, but then the county's perspective is years. so let me start with what unauditables are. So in the 2020 legislative session, our SAO RCW 4309230 section 1B got updated to allow us the hammer. Everybody asks us in audit, like, what makes me have to file? Well, please file, be transparent, be accountable. Well, the hammer is if you don't file and we can't audit you, we can deem you unauditable. And then the counties have all kinds of extra powers. So I know it's fun. You're like, we do? The county is not allowed to pay the bills of a special purpose district that we deem unauditable unless the county deems it as like a public safety or a life and death type thing. So usually you're going to keep paying your fire district bills, because that's a problem. But the county gets more involved in that. Otherwise, you're not allowed to pay their bills. The state treasurer is not allowed to issue state remittance to the county when a district is deemed unauditable. So that is fun. And then the county also has the power to absorb the district. They can dissolve the district, or they can appoint a new governing body due to that governing body's failure to comply with laws. So there's some powers that came with unauditable that go beyond if a district is inactive, I think it's 7 years, then you're allowed to start doing the dissolution process. We can speed that up through unauditable. And we look at unauditables as they don't maintain their records in any way or fashion for us to audit them, or they don't file. And usually it's a combination of the two. So some stats related to this. We actually had just taken one off. So now we only have one unauditable in process, but I had two. Thankfully, we got one to file, and the team has begun the audit process. So we are going to save them from the pain of being an unauditable government. We have 22 unauditable reports that we have issued since the 2020 law update. And it doesn't sound like a lot, but when I show you the process to get to this, it's a lot of work to get to that. Once we did that, we had 12 of those governments decide to file and get their audit, which was wonderful. And we had 4 of those governments get dissolved. Either they dissolved themselves or the county stepped in and dissolved them. And currently, I have 6 unauditable governments that are still on the list. And three of them are being worked on by the counties to dissolve them. 2 of them are in the process of working with the audit team to file and get an audit. And the other one is like we don't know where anybody's at. So nothing is moving on that one at the moment. When this started back in May of 19, we had 40 governments that we had deemed unauditable before we had this official law change. So we've gone a long way since those 40 governments. So this is the process that SAO has to take to deem a government unauditable. It really does start with they don't file. And we're like, wait a minute, they're not filing. And we start doing outreach to schedule an audit, find out what's going on. And that can take many phone calls, sometimes many months. These little governments, sometimes they're ghost governments, like they have no governing body, like what happened with them? So then we start working with the counties to go, what's going on? Sometimes we just don't have updated contact information. And then we get contact with them and those districts are like, oh, we are supposed to do something. And so then there's an education process and we have to get them filed and start their audit. A lot of that can take months, sometimes a whole year. It really depends. If we do all of our outreach efforts and nothing happens, we send what is called a last chance letter, and it's certified mail, and then we email all of the elected officials of the county. So like the prosecuting attorney, the auditors, the treasurers, and the board of commissioners all get a copy of that letter so you all know that this is probably going to come your way. Sometimes that will trigger the government to go, okay, fine, we'll file and have an audit. Sometimes it does not. So if the last chance letter due date passes, we deem them unauditable, we issue the audit report, and then that audit report is sent to the state treasurer and to the county so that you all know to not pay their bills anymore or release their revenues. And then we get the call of a district that says, wait, they won't pay my bills anymore. And we're like, well, we told you. And then we have to go through an audit. The only way to get off the list is to have a successful audit. And we will not tell the counties, go ahead and pay their bills. We've told the districts this before. We're like, you need to have an audit report be released so the county knows you've been audited. So we try to rush through those ones. We don't make them wait. We're like, okay, you filed, great, let's start the audit. You need to be responsive because we want to get this report out as soon as we can. So, I should have moved that slide up because I already talked about the consequences. So yeah, unauditables. So the questions that we get with unauditables is usually from the counties, like, what do we do next? And this is where we go, please go talk to your legal counsel. We have sped up the dissolution time frame for you with an unauditable. You don't have to wait till they're inactive for a specific period of time. Since we deem them unauditable, a county can start to go through the dissolution process if that's what the Board of Commissioners wants to do. Sometimes appointing a governing body is all that's needed. That's totally fine. Then we want them to follow whatever the next election process is to make sure that the citizens vote them in. Once they're in, we ask to get in touch with them so we can help them file and try to get an audit done. Or you might be able to absorb them if it's an activity that your county can do. So it kind of just depends on the situation. So that's unauditables. Questions? New topic for everybody?
So I have a fun, I came to work for the county in 1995, and I got a phone call one day. I was an elected board member for our local park and rec district, number 4 for Ritzville. And I got a phone call at my desk in the county from Dwayne Waltz. And he said, are you Heidi Hunt of Park and Rec 4? I'm like, well, yeah, out of work, but here I'm at work right now. Well, I need to talk to you about that. You've never filed an annual report. I said, what's that? I said, what is that? I don't even know what that is. And so anyway, he helped me, but I thought, and look at, now I do the whole counties and several junior taxing districts, but I got that phone call at my desk from Dwayne, who we all know, Dwayne. And he's like, you've never filed an annual report. I said, I don't know what that is. And so, yeah.
Yeah, it can sneak up on governments, especially the little districts that, they're usually volunteers and they have no staff helping them and they have no idea of all the rules and laws that govern them. And it can come as a surprise to them. which is unfortunate because then they're in a situation that we have to try to rush through so that they don't get deemed unauditable. So yes, it's one of the things when you have new governments or new commissioners coming in for your special purpose districts and they're asking for reports and whatnot, it's helpful to just be like, here's SCO's website, guys. Like, please make sure you get your audit and that you file.
Can another special purpose district absorb them? For instance, if we have multiple water districts and one goes down, can another water district step in?
That's a great question, and one where I would say you need to check with legal counsel to find out the steps, because every single district law and rule is different. Depends on how they were created, who created them. Was it citizen vote? Was it a board of commissioner creation? All of the different ways an entity can be created, there's rules of how they can get merged and dissolved. So it's really important to look into all of those. A lot of them are done by vote, so then it's putting it to the citizens to vote a merger and then go through the merger process. And what we like is if something is happening, if the county's like, yes, we're working on something, here's my update, that really does help, because we'll just update the notes on an unauditable district and we won't keep trying to pursue a continued unauditable report. We'll go, okay, we're going to give the county a year and see what's going on. So it's a long process to dissolve a district. How long does it take? Thad's working on one. How long has it taken?
We're all done.
Oh, good. Yay.
If you have time, I'll tell you what we did, or you can come talk to me afterwards. What do you prefer? Because I know you might be running behind. You want me to explain it now, or just come talk to me?
What do you all want? We're working on one right now too. Oh.
So you want to hear it now, or just talk to me later?
What do you guys want to do? Oh, I see a thumbs up. All right, go for it.
Okay. Well, in our case, there was a little hospital district formed up in the upper county near Cooley Dam. And it was right in between other hospital districts, kind of a no man's land, because the people up there were a little hard to get along with and they didn't want to be in any of the other districts, you know. So they formed and they poured a cement helicopter pad so a helicopter could land and, you know, evacuate people or whatever, hospital district. And so that was formed, you know, I don't know, 50 years ago probably. And the same people that were on the board were still on the board. They're now 80 years old. And they couldn't get any hospital district to merge with them. And at the same time, you guys had contacted us and saying, hey, we can't get them to respond. So they're getting on the unauditable list. But in this case, they wanted to disband. And so they came and also made that request at the same time. Okay. So we explored what we needed to do. And in our case, we had to actually go to court to dissolve them. And it was kind of interesting because, you know, we did all the paperwork and I gave it to them and they got a court date and they went in. And the judge totally misinterpreted. He thought they were two disgruntled citizens in the district that were trying to shut them down. And so he tabled the whole thing and said, I need more information. And so they came back to me and said, but we tried. You know? So the next court date, I went with them and testified, said, this is what we're doing. And the judge granted the dissolution, and you have to show the judge what you're going to do. So here's what you have to do with their assets. And they had a helicopter pad of cement on the ground, so that's not worth anything. And then they had about, I'd want to say $10,000 in cash in the treasurer's office. And so what the RCW requires you to do in that case is distribute that money to all the school districts. And remember I said they were in no man's land there? Well, a bunch of school districts touched them. We ended up distributing the money to 5 different school districts according to their population, as I recall. And we cut all the checks. And so what happened is we had to give that information to the judge, and then he did a court order that this is what you do with the money. And then we had the treasurer. Once we got the court order, we distributed the money. And then I had former state auditors on my staff, their chief accountant. So I turned it over to her and says, okay, close it out. So she contacted you guys and we got a final audit report acknowledging that it was done. And we were done.
Yay. How long did that take?
Oh, it took several months.
Yeah.
Especially with the court dates and stuff. And,
Yep.
Yeah. So in this case, we didn't probably go through the whole process that you outlined because they wanted to disband anyway.
It's super helpful when they make that decision.
So when they want to do it, I think it makes it faster.
Yes.
So.
Yeah. It's not a quick process for sure. And it can be very expensive, just staff time expensive. So we tried to, I tried to avoid it at all costs. My team has the most, since we do the audits of the littlest governments. I try everything short of going to their home and knocking on their door and saying, please file, because that would be weird. But we try everything possible so that we could avoid it.
And actually, you were asking us to go knock on their door.
Yeah. Like, can you guys go find them? Find out what's going on.
So, and I think I'm going to reinforce what you said earlier, that these are the RCWs pertaining to dissolving a hospital district.
Mhm.
So I can't guarantee they're exactly the same steps for a fire district or parks district or
Mhm.
whatever, So you got to dig into the RCWs.
Yep.
Probably
And
work
how
with
they
your-
were created too.
work with your
Usually how
PA.
they were created is how you have to unwind them.
Yeah.
And if they're
Yeah.
not there, it might involve going to go. There's another one that we got where the county had to go to court to do it because there was no governing body and they didn't have the right to make the decision.
And if I understood you correctly, when you declare them to be unauditable, you're going to shut off so if it's let's say they receive property tax revenue,
Mhm.
you're going to shut off that money. Is that correct?
Yeah, the counties would still collect, like all of the revenues still
Yeah.
come in because should hopefully be benefiting the citizens.
Mm-hmm.
But the counties, as the treasurers, are not supposed to relinquish that money to the district or pay their bills. However,
Well, are you communicating with the treasurer to that effect?
we tell them, here's the report and you're not to pay the bills, but then the counties can decide. Like if we deemed
Okay.
a rather large, small fire district unauditable. And in conversations with the county, we said, clearly you have a public safety concern. So you are able to appoint, absorb, govern. You can do all of these things to make sure that your citizens are taken care of. So
Can we use their money that you've told us to hold?
you can't use their money.
So are we issuing tax-bearing warrants then?
No, you would. So what would happen is if a county says, I need to cover the firefighters to pay the bills, and the commissioners are still meeting, because usually in this situation, the government was operating. The commissioners were holding meetings and approving stuff, and the county's like, can we pay these? We're like, you need to make that judgment call. And you need to be able to support that judgment call, because at the end of the day, if this goes to court and the judge says, why did you pay the bills? You'd say, well, they were putting out fires. So we have a legal obligation to make sure our citizens are taken care of, and we utilized their tax money that they collected for that purpose to pay those bills.
So I wouldn't do that without written decision by my prosecuting attorney.
Yes.
And the commissioners buying off, maybe to the point of passing a resolution.
Yeah, see, and that's where every county will do something different. This county had meetings and discussed it in open public meetings and made decisions. So it was everybody knew what was going on, and they talked with their attorneys and everything like that. And then they got them to file, and we did their audit as soon as we could. So it was resolved. But every county kind of has different processes. And that's what I would recommend to counties is go talk to your attorneys and find out what you all are willing to do and wanting to do, and then make that happen.
Thank you.
Yeah, you're welcome. Yeah.
So we have an odd one that kind of fell through the cracks. It's been unauditable, but the state auditor's office really didn't know about them because they're not collecting tax dollars. We're not paying their bills. However, they have an elected board. They were formed through a private donation. Actually, it's a swimming pool and rec district. So when we got on this topic, I was like, I'll just ignore it because we can't do anything. I think I heard you say that you sped up the process of unauditable districts. So the last advice working with SAO on this we received was they don't have a board to dissolve. So our next process was 7 years of this unauditable status for us to act. Has that changed? Is that what I'm hearing?
We probably should talk.
Okay.
No, that has not changed. If they are a government that was formed under any process to create a government, and they're not doing what they should be doing as a government, we absolutely should be deeming them unauditable so that the county can shut them down.
Let's talk.
Yes.
So I know this discussion's been focused on unauditable, smaller districts, but one of the things I want to make sure, I'm not sure how many counties have had to deal with this. I know this is something that's been very problematic up in Clallam County is failing Class B water systems, privately owned water systems. And we actually inherited one through a receivership process that was initiated by Department of Ecology. They basically took this private water system to court, and the court, without having Clallam County present, basically, chose us to be the receiver of this water system. And so we have been dealing with this for 5 or 6 years. We actually have had to use ARPA funds in order to identify a solution that's going to get us out from underneath this water system. We also came very close to having a water and sewer system, again, privately owned, but in this pocket of Clallam County that was within the jurisdiction of one of our cities. It was actually county, but it was in the middle of a city. And that was very close to becoming a county problem that we were going to inherit. And luckily, we were able to partner with one of our cities, the city that was involved, and we're able to work together, collaborate on locating some grant funding to help provide a path so that city could eventually annex that water system and private sewer system. So I know we talk about unaudibles, but again, I think that this is something that it's probably, if you haven't had conversation or reach out with Department of Ecology, just to make sure you are aware of any water systems that are on their, I guess, naughty list and non-compliance list. I think it's better to get ahead of those rather than just crossing your fingers and toes and hoping for the best, because again, we've been dealing with this particular problem for 6 years. It's consumed a lot of resources for us, and resulted in a lot of angry customers, because obviously when government is running a private water system, the costs of us having to provide that service are a lot higher than what the residents were accustomed to. So
We had a governmental water that fell under that we also have had to deal with. They got real close to being unauditable, but the county really stepped in and helped with that one. I believe they were also given, I think that we talked about, it's been a couple of years. I think it was given to the county to monitor them. Yeah, a lot of things fall under the county's jurisdiction, unfortunately, when citizens are impacted, even if it's not a governmental entity. So that's great advice. Yeah. Oop.
Benton County, all of the above. So we have one under a receivership right now, a private water district. We had an unauditable fire district, and we did continue to pay their bills because they were very active fire district. Their accountant just fell down on the job really badly. But I believe they're back in line now. And now we're working on, just yesterday, we had the first hearing to dissolve one of our drainage districts, who it has been a roller coaster. This is our third time trying to dissolve them for inactivity. So you all know there's a statute that before June of each year, you should be reporting to your Board of Commissioners any districts that are considered inactive. And that's what we've been doing, is reporting to our commissioners. This is inactive. There is no, in this case, no actual board, because one died, the other two refused. They were, I'm dipping into election area, but they were, what's it called when they lapsed, their elections lapsed. And so while there's technically one commissioner, they don't want anything to do with it, and they haven't actually resigned. And we keep explaining to them, if you don't want to do it, you got to resign. Anyway, we're hoping this time it's successful. They were declared unauditable, and we used that as part of the inactivity. They haven't had a successful election in 6 years. They have been declared unauditable. We have been unable to identify anyone who a willingness to, so just a whole list of things. If anybody wants an example of what that looks like, I'm happy to send that.
Yep. And then,
yeah, I can send that to you, Carolyn.
yeah. And when we deem them unauditable, you get to jump past all of those other requirements. That was what helped us with this 2020 law, is if we say they're unauditable, you immediately are given the power to go through the dissolution process if that's what you choose. And that's what we tell people now is the hammer. It's really applicable to special purpose districts. It could potentially apply to maybe small towns. It would be very shocking for it to apply to a city or a county. So we're really talking about those little guys. Well, special purpose districts, some of them are giants, so I doubt it would happen to our larger special purpose districts. You have it.
I have a question.
Yes.
I'm curious as to that you go to the commissioners to tell them the inactives and districts and also for the dissolution. We had a fire district that was failing, like you could watch that they're running out of money. They'd just barely get to the point of no money and then they get a little bit of money and operate for. And I'd go to our commissioners like, it seems like they should know this. If they quit operating, is it going to be the county's responsibility? So I'm wondering how that all plays out.
I think it depends on what type of district it is. In our case, this is a tiny little drainage district. The statutes are very specific that it's the Board of County Commissioners that then kind of have this responsibility. I think it's different because Thad talked about the school district and distribution of the funds and things like that. Like if we dissolve this district, after we pay their final bills, we get to keep the money. We don't distribute it elsewhere. So, yeah.
Thank you.
Yeah, it's really important to look at the RCWs that govern whatever the special purpose district is because they are all very different. We like to just call the attorneys, tell us what we can do here. Yeah. All right. Unauditables. So if you ever get an email from me that says, hey, we got an unauditable, that's what it's about. And I've handed you all kinds of new power. So it does allow you to kind of jump over the hoops of the inactive requirement. All right, do we want to talk about capital assets? How much time do we have, Heidi? Make sure we honor stuff. I don't think you have any. No, I think Adams County is fine.
Let's see. It looks like we have until 2:55, but we started a little late. So let's say 3.
3. All right, can we do it? We can do it in 20 minutes if I talk really fast. All right. Well, we can actually look at these. We keep getting asked for capital asset training, and we're like, well, what do you need to know? And then nobody tells us what you need to know. So we're like, okay, well, we're going to start with what we call a basic training and then go off from there. So it gives us some discussion points and then kind of starts to steer us to what governments are actually looking for in the capital asset world, because it's a topic that's this big and it really depends on what you're all needing. So we were going to start with some basic definitions, just to make sure we're all using the same terminology, and talk about the different classes of assets, talk about when you capitalize them and you don't, and for cash you're using the capital code versus a functional code. And one of the big fun areas I want to make sure maybe we don't skip is the records and the retention of those records related to assets. And we have a couple of frequently asked questions related to assets I think we should also make sure that we get to. So let me start with at least some definitions. So capital assets, usually set by policy, and it's something that you are purchasing over a policy dollar amount threshold that will be used in your operations that has a life of more than 1 year. So we think physical assets like a building or land, something like that, and then we have intangible assets, which water rights, leases, and SPIDAs, which are fun accounting things that we do, easements, things you can't touch but have value. Now, this is very uncommon if you're not like the state or the United States government, but artifacts, treasures, art collections, you might have a museum that has a large amount of what we would think would be assets. Those are not capital assets. Those are like prized possessions that have no value. So there is an exception for art and historical treasures. They don't need to be counted as capital assets. They are more, you're keeping them to preserve them forever. And then we know that there's immaterial items. So you need to know your policies, and your policies really need to be reasonable. So hopefully written policies that say this is our dollar amount, these are what we consider more than like the useful lives. If you're doing depreciation, these are how we're analyzing that. We really want to make sure that you're including in that dollar amount that it's not so low you're including everything you buy, but not so high that you are missing a bunch of assets. So it used to be the federal grants was like $5,000. I think they've upped it to maybe 10 now. So a lot of governments just went $5,000 is good, and that seems to be the threshold limit. So we really just it depends on each government. You should check your policies. And for that threshold, it means GAAP is going to capitalize it. It's going to go on the balance sheet. Cash, you're going to use the 594 and the 595 codes, which will now tie to your new note that's applicable in 26 to talk about your capital. And another concept that kind of it seems a little foreign but has been around for a very long time is componentization. And componentization is when you have a really large asset. So think like a building or roads or bridges. They have different pieces of the asset that have different lives. So instead of saying, oh, here's my building and it's good for 50 years, you're like, nope, here's my roof, it's 25 years. Here's the steel framed structure that's 100 years. And things like that. So you make components of the asset so that when you have to make replacements and repairs of pieces of that asset, you can take them out and put them back in. If you just throw a building on the books, it raises lots of questions, which we'll actually get to in a minute. If you don't have componentization in your policies, don't think you can start doing it. You need to go through your policy and make sure it's documented in how you're going to track your capital assets. If you want to start doing componentization, great. Make sure you start addressing it in your policies first. So GAAP has to depreciate their assets. It's really important that GAAP chooses a systematic and rational manner that they are going to use over time. So we don't want you changing things back and forth. Straight line is the easiest. Most people do it. You could do like the double declining method, which why, but you could. So you can't just change back and forth. Like pick one that works, stick with it. That's what we ask for. And you want to make sure that if you have some assets that you know are going to have salvage value, that you are taking that into account in your depreciation method. A lot of governments just stick 0 in there, and we know that that's not entirely true, especially for vehicles. So for cash, since you don't depreciate, you still want to look at your useful lives. Even though that's a depreciation kind of a concept, it is nice to know in your policies how long you're expecting to keep assets, how long you're expecting them to last. So that just helps you keep track of them and have controls over your capital assets. So with the depreciation on the group depreciations, this one is a little bit harder to explain, so I might not need to go into it too much, but we think like a group of assets like your roadway systems. Like I just laid a 10 mile of road. So that 10 mile of road is good for 20 years. So now I have a group asset of this road. Or I have this set of streetlights that I've replaced. There's 300 of them. And then in 2 years, I'm replacing this 300. And over here, I'm going to place this 300. Those are groups of the same type of asset, but you're grouping them when you're purchasing them. And then tracking those. It becomes very detailed for GAAP when you're depreciating. So you just want to make sure that your records are very clear and that you're able to track all of your assets and how you're depreciating them. And I just talked about estimated useful life with the depreciation. We're focusing a lot on this because GASB in an infrastructure standard that's going to be coming soon, they really highlight the importance of double checking frequently, or periodically is the term that they use, what you are estimating the useful life of your asset to be. So for GAAP governments, it's very, very, very important that you look at your policies and address how often am I looking at the estimated useful life? When do I update those estimates? How frequently are we doing math around it and fixing our records? Because we see people put car 5 years and then 15 years down the road, the car is fully depreciated and they're still driving it. So clearly our estimated useful life has changed. How often are we looking at those things? So it's really, really important to check those. I'm going to kind of go through these. Anybody here? We only have 3 counties that do modified approach. Anybody in the room that's doing the modified? Oh, good. Oh, yay. Modified approach is, I used to not like this process. And then I did a lot of research on it because of that GASB statement and went, oh, actually, it totally makes sense. So there is an option for gap governments to use what is called the modified approach on infrastructure. So think your roadways. And that lets you say, here's the value of my asset. You don't depreciate, but any expense to keep the asset at the condition level that is selected is expensed instead of added to the asset. So it just changes the methodology of how we track asset depreciation or expenditure. Okay, Olivia, major classes of assets.
Okay, we'll go through these kind of quick so we have time for the other important things. You guys know what asset classes are, right? Like we have land, the stuff we stand on, improvements other than buildings. That's kind of like this weird concept. It's like if you're improving land, so like fencing, parking lots, retaining walls, that kind of stuff. We call it improvement other than building because it's not improvements to buildings. Construction in progress, these are things that you are building, you're constructing over time. So for our gap governments, right, you put all of this in a construction in progress account and you don't depreciate it until the asset's placed into service. Once you place it into service, that's when this depreciation thing starts. Cash governments, doesn't really matter for you, you're capitalizing it either way. Buildings, these are what we think of as permanent structures. They're not moving around. And when you capitalize your building, if you're increasing the service utility of a building, so if you're adding a new wing to a building, that would be capitalizable. If you're doing something to extend the useful life of the building, that would also be something you would capitalize. And then there's this weird thing with impairment that I won't get into right now, but if you have impairment and there's restoration, you might have some capitalizable costs there.
So for the building piece, if you were, say, changing office space into a courtroom, it's a different use depending on which area of government you're in. You could say it was more useful or less useful, but would that be a capitalizable item?
So that depends. As your remodel or whatever you're doing to it, is it going to extend how long you can use that building or that room for?
It's still just part of the main governmental building. So
Yeah. Stacy has a good example later with a roof situation that's kind of similar, right? If you're only doing part of the asset, what do you do with that? So we'll talk about that in a little bit. Okay, infrastructure. So these are other big assets that are stationary that besides your buildings. So this is like your roads, your bridges, that kind of thing. And they can be preserved for a really long time. So they're usually reported as like networks or subsystems rather than like individual assets. Furnishings and equipment, these are things that are movable. So your vehicles, any machinery or equipment, think of stuff you use like to create roads, that kind of thing. Right, to use assets, these are the weird ones, right? These are intangible assets. Now, if we think about the definition of a capital asset, it's something that you're going to use for more than 1 year that gives you service capacity, meaning you can use it to provide services and do your job as a government. So if you have a lease and you're leasing that building, you're using it to provide those services. And if you're using it for more than that 1 year, then it meets the definition of a capital asset. So that's why we're including these things in there. Same with your subscription software, right? If it's above your capital threshold, you're going to use it for more than 1 year, you're using it to provide your services. It's giving your government service capacity. So that's why we include these under the capital asset umbrella. So for cash governments, you're using your you use debt service because it's also like debt, right? Gap governments, you have capitalizable costs and this debt service thing. So they're just a little bit weirder, but they do technically fall under this capital asset. Also things like leasehold improvements. If you spend a lot of money to improve a building so you can use it that you're leasing, you're still using that to provide service capacity. So you can capitalize some of your costs for leasehold improvements. Stacy.
I love it when Olivia gives me slides. Okay, When do I capitalize? We get lots of questions around this. So capitalization occurs at the original cost. So the value in which you are paying to acquire the asset. And so for cash, it's just, I paid for it, goes to my 594, 595 GAAP. That's what you record in the asset record. Donated assets, anything that's given to GAAP governments that you don't pay for, you still need to account for that as a donated asset in your financials. And it's at what would be the price you would pay to acquire a like asset. So that's, you got to figure out what that would be. For cash, unless you are getting that asset as a result of an exchange for some sort of service or good, there is no Schedule 01 transaction. But if you are getting it instead of cash payment for some good or service, then you do have a Schedule 01 transaction, because in lieu of cash, you were given an asset. So if you ever have that situation, you're not quite sure what to do, just send us a help desk. It does come up occasionally. Capitalizable costs, you got to also remember any cost associated to getting the asset ready for service or putting it into service, such as shipping, installation, taxes, legal fees, those kinds of things. Those are all allowed to be part of your capitalized cost. And we have a fun little picture. So we get asked a lot about things like feasibility and training. So can those be part of a capitalized cost? We get it a lot with building a new building or a site selection, feasibility study. No. It's when you know the project is going to occur and where the project is going to happen, you start capitalizing. The training piece, we get asked a lot, well, we're buying new software or releasing new software, we have to train staff. That is not a capitalizable cost. So we want to make sure we're real clear that no training. We get asked that one a lot. So once you know what project is happening, costs associated to get the asset into service, from the time you pick the site and pay for the land all the way to we are ready to use the building and all the associated pieces are in it, or that we bought a fire truck and put all the stuff on it and our logos on it, all of that is capitalizable. And then it's ready to drive away and you start using it, so expenses stop. Now, I do know that some expenses still come in a little bit, especially if you're doing like a vehicle or a building. You're maybe waiting for something else, but you can start to use the building. I've seen that we've had like elevators. Well, the front elevators are in, but the service elevators aren't. Yes, that's still part of your capital asset. It's not when it's in service. It's if it's part of it, was part of the plan, it's still fine to capitalize that, even though you might already be in the building. So we do get asked that question sometimes too. And improvement. So this is like this question. So the original estimated useful life of any asset. So this is really important for both GAAP and cash, and really important for cash because I don't know if you have these in your policies. So if you have a building and you're like, it's 50 years, right? And you just throw it on the books. We don't know any of the pieces of the building. And so is it a repair or isn't it? So the general rule of your assets, if you can expense it as a capital expense or capitalize it if you're GAAP, is it extending the estimated useful life of the item, or am I increasing its service capacity? So like a roadway, if you're adding a lane, you've increased the service capacity. That is absolutely capitalizable. If a building, you're adding a wing to the building, absolutely increases the asset because you're adding its service capacity. Now, if you've componentized, it makes this example easier. It's the example of, well, I'm changing the purpose of a building. So if I've componentized a building and I have to replace the roof, and the roof is a component in my asset records, you get to remove the roof and put the new roof on. Yay, it's really easy if you are componentizing your assets. If you haven't, it's a little more difficult. You can try to figure out what maybe the estimated or what the roof's original cost was and how long you've maybe carried it through your depreciation records. Can I take it off? You have to do a lot of math, which is records and retention, which we'll get to in a minute. So you can figure out how to capitalize those costs, but you're going to have to take something for GAAP, you're going to have to take something off your books to do so. So you have to figure out how to do that in your asset records. And for cash, you're going to have to prove or justify why it's a capital expenditure. So you need to do some math behind the scenes. And that's where records and records retention comes into play. No matter what basis of accounting you are, you should have some sort of asset record keeping system that talks about what the asset is, where's the asset at, who's in charge of the asset, how much did I pay for it. If you're componentizing, then you can break down those components of it and how each piece of it, your expectation of how long it's going to last, which then makes it easier if you want to replace the roof or pay like $1 million for new windows. It's a big expense, but if it's not componentized, it becomes a functional expense, not a capital. It's really important to follow the Secretary of State records retention. So I highly encourage you visit the Secretary of State and pull up their record retention schedules and pay attention to the destruction record. This is a little tiny. I know that you're going to get copies of these slides. So this one is assets other than real property. Records are required to be maintained, all of the records, like purchase records, all of that stuff, for 4 years, up till 4 years after you dispose of the asset. So some of you probably have buildings you've had for like 150 years. Do we have the records for those? Yeah. So this is where assets get real delicate real fast. So there's that one, and then there's land. Real property, land, water rights, rights to things. It is 10 years after the disposal of the asset. So it's really important to ensure you're keeping your records, which then helps make the math easier when you want to take that roof off, or I'm taking a bunch of walls down and expanding the space. It makes it a lot easier to figure out those costs so you can justify capitalizing those costs instead of expensing them. All right, you have like 3 minutes, Livia. Can you do it? Frequently asked questions. She's like, I got this. Challenge accepted.
Okay, I'm going to pick a few to go through. I don't think we have time to go through all of them. Gap governments, we get this all the time. I increased our capital asset threshold. Do I get rid of everything under it?
Okay.
No, absolutely not. You keep it on your books until you dispose of the record. This is not one of those accounting changes under GASB 100. Okay, cash, retainage. We get a lot of questions on this. So if your contractor bills you for $100,000, but you only pay them $75 because you have to hold back some of that for retainage, what do you do with that?
Okay.
You're going to record the full $100,000 as a capital expenditure at that time, even though you haven't released retainage yet. What you do with that retainage is you now record a receipt to our retainage deposit code. And then when you pay them that retainage, we have another deposit code here that you would record. So you record the full expense at the time that you make that first payment.
Tammy, can you help me?
Because you have done this weird thing with retainage, right? You have recorded a receipt that like you didn't actually receipt cash.
Yeah.
That means you're going to have a reconciling item on your bank statement and your Schedule 06. So just remember, anytime you put something in your accounting system and there wasn't that related cash flow, think about your bank rec, think about your Schedule 6. That's going to be a reconciling item. Gap governments, you don't get to use these codes because you report a liability until retainage is paid. This one's pretty complex. I'm going to skip through this one. If you're building an asset with another government,
you can see why I was confused.
It depends on
because I was
who owns the
expecting to
asset
tie
during
to that
construction, who owns it
77692
afterwards. There's a lot that goes into it. So I'm
And
going to
so
click
when
the
I
button a
didn't
lot
tie
of
to that
times.
number, I didn't understand what we were accomplishing.
Okay, cash. If you paid for your vehicle in 25, but you don't receive it until 26, just remember your cash basis. Report it when you pay it. So you report it in 25, even though you don't get the vehicle till the next year. If you have a contract that includes your tangible asset and software at the same time, so like a smart copier, or a lot of times it's body cams with the related software to run the video, do you have to record both the lease and a SPIDA? No, please don't. You can treat it as one. If you think about lease and SPIDA reporting, they're identical. So you just choose what's the more prominent component. If software is insignificant, treat it like a lease. On the
Got
other
it.
hand,
I
if
will
software
CC
is
Felix on this as a
significant, treat it
reminder
like
to
a
make sure
SPIDA.
that
So you
second
just
half also gets
keep it
moved.
together. You don't have to split things up.
Okay, perfect.
And
That
you
makes
just use
perfect sense.
professional
Thanks for the
judgment.
phone
Is
call.
this more lease, more SPIDA?
My pleasure. You too.
Insurance payment for damaged capital assets. We have a lot of bars codes for this thing. So cash, you get it easy, right? You receive cash, you report revenue. Your bars code is 39520. Gap governments, you have different codes depending on what fund. Your governmental funds, you have 39540. But when we talk about your proprietary and government-wide, if it's received in the same year, you're going to net your insurance recovery with impairment loss if you reported impairment loss. You never, ever, ever net your insurance recovery with the cost of replacing the asset. Those two stay separate. On the other hand, if you receive that insurance recovery later and you've already reported impairment loss, you have nothing to net it with. So in that case, you just report a revenue to bars code 372. Okay, that's it. And we're out of time, I think. But if you have questions on capital assets, please come find us and let us know. We're happy to answer all those.
Another great session. Thank you so much, Olivia and Stacy. We need a break, right? But before you go, take the time to step over to Modus Technology and Workday tables. And if you haven't already done that, but we started even a little later. Come back at 3:15. Is that too long? 3:15. And we will welcome Brad White and Niles Kostick from the SAO. They'll be presenting audit updates and county resources. So see you shortly.
What's wrong, sweetie? If I'm on a phone call, I prefer you not just set Jack free.
Sorry.
Well, I get one phone call a day. You want some help, sweetie? Hi, Jack Jack. I'm sorry, I wanted you to leave. I couldn't pay attention to you. I'm sorry. I gotta approve this journal for race now. But I'm putting. Almost done.
Okay. Hope everybody enjoyed that wonderful snack. I think there's still some left if you want to go grab some more. There we go. Oh, picture, yes. Now do a funny one. No, just kidding, just kidding. I'm like, how not to be your parents. Isn't that a commercial? The person goes, now do a funny one. Okay. Oh, I guess I don't get to introduce, do I? Never mind. But I will because I'm up here. Now we have Brad and Niles, and they are going to talk about audit updates, what to look for, what they're going to look for. Maybe we can beg them not to look for some things. I always say, nothing to see here, nothing to see here. Thank you for joining us today. We really appreciate it.
Absolutely. Can everyone hear us? Okay. All right. So we'll get this rolling. So this is going to be a joint presentation with Niles and myself. So I'm from the local audit side. So I'm actually the Team Spokane audit manager. So I'm based out of the Spokane region. I work with Adams County, Spokane County, Lincoln County, Pondere County. So quite a few counties on the east side. And I'm also the county program manager. And then I'll let Niles introduce himself.
Yeah, so my name is Niles Kostick. I manage a bunch of really smart people at the auditor's office that try their hardest every day to do really cool things to help you guys out. So that's how I describe my job, is I work with a lot of really smart people that put together resources, trainings, hands-on services that you guys all have access to for free. And some of those resources I'll talk about today with Brad.
Okay, so we'll just kind of go through the agenda really quick. So one of the things I always talk about is the common audit issues from the last audit year. So that would be for fiscal year 24. Most of those audits are done. There might be a few stragglers, or we're almost done with that. We're going to be starting your fiscal year 25 audits coming up soon. So we'll talk about some things for the next audit. So the required risk to assess, those are some things for the next audits that we'll be doing in 25. I'll talk about a few emerging issues, and then where Niles comes in is with the helpful resources. And so I kind of talk about, I'm sort of like he's the good cop, I'm the bad cop. I talk about all the things you have to do, but then he comes in with resources on how you can do those things better. And I think that's really helpful to have that in this, to kind of have both of those sides of the equation. So the first thing I go through is the audit issues for the counties. So I just looked at management letters and findings. I didn't go through exit items, just to kind of get a flavor for what we saw in the last year. So the first one is financial statements. So all of those are sort of in the same bucket. So there's 5 management letters and 3 findings. And then you get into the single audit. So we had procurement. There was 4 management letters, 2 findings. Suspension debarment, unfortunately, seems to always be the one with the most amount of findings. I'll talk a little bit later about maybe some things you can do to avoid those. We have a couple for subrecipient monitoring. A lot of that, I think, had to do with the COVID money, as there was a lot more of that going on with those grants. Then we had 1 for allowable activities. We get into our accountability audits. We had 1 for EFT transfer. I'm going to talk about that. Unfortunately, this is a really high area for fraud that continues to happen. So we'll talk about sort of what we're seeing with that. We also had some contracts, just 1 management letter for that, 1 for cash receipting, and then a couple for procurement related to accountability audits. So going into a closer look, so we'll get into federal procurement, suspension debarment, as I mentioned, subrecipient monitoring, and then financial statement prep. So for the federal procurement, this is an area that we look at every year when we have an audit where that's like applicable to the program we're looking at. The thing that seems to be hanging people up, that I see a lot of the management letters and findings, gets into the procedures and the policies. This is one of those areas where the federal government, unfortunately, is pretty nitpicky. It's one of those things, if I was looking at it as a manager in an accountability audit, I probably wouldn't write a management letter finding. If you put the policy into place, you're just making some tweaks to it. But for the federal government, we've vetted a lot of these with them, and we have to write findings or management letters based on certain things if they're not included. So one of the things that's really important is being consistent with state and local laws and regulations. And then the other part of it is you have to use the most restrictive of federal, state, or local. So what that means is if the state laws are actually more restrictive than the federal laws, you have to go with that. Typically, it's either federal or state. Sometimes it could be your local policy that's actually the most restrictive. That's the one where you do have some choice when it comes to that. So if you have a policy that you feel is more restrictive, we come in, our job is we have to audit to the policy. So if you say you're supposed to do something a certain way and you're not doing it, then we're going to write a recommendation. This might be a good opportunity to talk to the commissioners if you feel like maybe this is an outdated policy. It's not something that people are actually doing in the day-to-day. And if you're able to change that policy, then that's going to really be helpful. The other ones you don't have, a choice in terms of what the federal or state regulations or laws are. So then the other part of it, this one I think has been cleaned up pretty well by most counties, but you have to maintain written standards of conduct. And then the other part of that is if you actually had an issue of potential conflict of interest, you'd want to let the grantor or awarding agency know that. So when we find issues, so if there's no policy or procedure in place, that would be an issue. I think at this point, every county I've looked at, they already have one in place, as I kind of mentioned before. It's usually that it's too limited. So a lot of times it's those missing thresholds. So the federal government says you have to have specific thresholds in your policy. So what I'll see sometimes is maybe you reference the RCW, you link to it. And even though that might seem like it makes sense, the federal government, we've talked to them about it, our specialists has worked with them and asked, and they said, no, you really have to have those thresholds in the policy. I know I've heard the argument that, every year you could have a change there. What the feds have said is that you're responsible to look at the policy every year, review it, and then update it if there's changes. And then if that standards of conduct policy was missing, that would be an issue. So I'm going to turn it over to Niles to go through the first set of resources related to program.
Yeah, and I think you touched on, the main point there where, if is it supposed to be included in your policy or reference to the RCW, because one would think that, hey, just put the RCW in there, it changes frequently, then we don't have to go back and update it. But that's kind of the point, right? Is for you have to go in there, make sure that what you have is the most current guidance available to you, which we know that every year there's changes. So speaking of those changes, our office does put together a suite of procurement resources for you guys to go out there and check out. And just like your policies, they're looked at every year. They should be updated to reflect the most current changes in state and federal law or the requirements under the granting guidance. Our guides are as well. So you'll see soon coming through our blog that we put out our updates through, an announcement that we've updated 3 out of those 4 in the past month here, and we're kind of releasing them all for you guys to take a look at this spring. So those include the buying and bidding guide, which is kind of the full from cover to cover experience of what procurement should look like. So we talk about purchases, what those purchase thresholds are, how you should set that up, how you should research the costs of every project up front and whether or not to consider sales tax, all those little things when you're putting together cost estimates, going through the actual solicitation for or search for people to, solicit those purchases through. We go through public works, define what those are, define the exceptions for you guys. You may be aware, but there are some changes or just clarifications in state law regarding the use of day labor for some counties. And we've also made a little bit more robust the documentation for prevailing wages, which we know comes up both in federal and sort of local procurement issues with our office. We find a lot of prevailing wage issues, mainly just documentation and making sure that you guys are checking to make sure that all contractors and subawardees subcontractors are being paid that prevailing wage. In relation to that, the responsible bidder requirements have also gotten an update in the most recent year's worth of changes at the legislature. So there's a couple of changes coming put into place this July and then next July relating to how you're checking to make sure that the bidder that you are seeking to engage with is responsible, is qualified. And again, the whole idea behind that checklist is to make sure that before you start paying somebody and you're awarding this set of money to, that they're allowed to collect that money per state law, that they've met all the requirements at DOR and LNI and all those other places, that they're not barred from doing business, that they have they're a legitimate business and are in good standing with the state and the feds before you start giving state and federal money to them. What you'll see if you've used these two in the past, or if your county, whoever's in charge of kind of putting together the documentation to prove that you've successfully met the procurement requirements, we've turned the responsible bidder, what used to be a best practice or a guide, into just a pure checklist. So it's in Excel. It's meant to be used over and over again and includes all of those questions which you should be asking. I'm going to talk a lot about internal control at my session tomorrow, but a checklist is a fantastic control activity, especially for the people like I know a lot of you in the room are, which have to verify that all these requirements have been met before you start issuing those payments, right? Before you start cutting checks to people. And so those checklists is a good way to see, have we done all the things that we're required to before we start paying and engaging in this contracted work. So that's just the kind of the suite. I know that everybody in here just has a part of this bigger process. So if you've got, central purchasing department, or you've got others that, in public works that are having to write these contracts and write purchase orders and things like that, these resources are fantastic to pass along to them, earmark the section that might be applicable to their step in the process, and hopefully we can get through an entire project or purchase without getting tripped up on the many requirements in state law. I think I just talked about all these actually. Yeah, so our buying and bidding guide, expanding requirements for prevailing wage, update the responsible bidder criteria, etc. We also just noticed in there, we did clarify and add a little bit more language into the day labor for counties for certain sizes of projects. So depending on the size of your county and the size of the project, some of that day labor information might just be good to take a look at. Our change order guide, also updated that recently. And again, with change orders, the big thing that we're trying to avoid is the start of a new project, right? Change orders can circumvent the bidding process if they are such a large change that it does turn into something that's outside of the original scope of the proposal that you've accepted. So it can cross that line pretty quickly. And so our change order guide just basically has you ask those questions. Should this be sent out for rebid? Is there a way that we make sure and check that the change of this work isn't exceeding the scope of our original plan? So we don't get into a situation where now we have failed to do a public works, a formal bidding process. And then finally, I let you know, responsible bidder checklist, now in Excel, and it integrates those law changes that take place this July and then next July. All right, let's talk about some federal stuff.
Okay, so this is just talking about federal suspension and debarment. There's a different process if you're talking about state in terms of where you're looking at. So for a federal grant, if you're spending money for any contract or a purchase that's over $25,000, that's where you're required to do a check on the suspension and debarment. So I think the first part of the process that's really important is that there's someone that's sort of responsible to catch those, because that can be an issue if you have maybe a smaller one that's just over that threshold and you didn't realize you had that contract, so nobody checked to see that they were suspended or debarred. So there's three ways you can do the verification. So it can be a clause in the contract, you can check the status on sam.gov, or a written certification from the contractor. So it's really up to you how you do this. I just kind of tell you the pitfalls that I see from the three options. So the first one, I think if you're entered into a contract and you have this in every contract for the county, usually that's pretty solid, as long as you identified you had the contract in place. Because if every contract you enter into already has that in there, you're going to be good to go. The second one is probably where I see the most issues in terms of checking the status. The problem is you have to have something that shows us when we come on site to audit that you check the status as of the date before you entered into that contract or made the purchase. So I think a lot of times what happens is someone probably did go check it, but there was no evidence to show us. And as auditors, we can't just take someone's word for it. So if you're doing this process, you want to make sure the person doing it's taking a screenshot, doing something to show we went, we looked, they weren't on this list as of the date that we did that. Typically what will happen when we write a finding for this is most likely, it's very rare someone is actually on this list, which is one of the reasons I hate writing this finding, because typically what we're going to do is our auditors go look, we see, yes, they're not on the list. So then we don't have to say that you're out of compliance and question those costs. If we question costs, the grantor could potentially take those funds back, but we still have the internal control weakness that we have to write up because we don't have evidence that this was checked prior to giving that money out. And then the last one is written certification from a contractor. So if you're getting that and you have that on file, that's another way that you can be in alignment with it. this one, really with all three of them, if you forget to do it, obviously we have an issue. So if you typically have a good process where you get that written certification, but you forgot on a certain one, and we see that in audit, then we unfortunately have an issue. So not checking, that's obviously going to be an issue, but it's usually not retaining evidence. I think that's what we see quite a bit. So the next one is subrecipient monitoring. So I mentioned earlier, we saw a lot more of this with the COVID money because there was a lot more money where the county is getting the money. They're having to, pass it through to all these different subrecipients who are carrying out the various parts of, whatever part of the process you were in. It might have been in the early parts of it. There was money that was being given out to testing centers and staging areas. A lot of the problem was a lot of these new subrecipients had never had federal funds. So they weren't sure exactly what they were supposed to do. And you're dealing with a pretty big volume of subrecipients. So you just want to make sure that you were doing those risk assessments. A lot of the COVID money is mostly gone at this point. But this is just something to keep in mind for, future funding when there are subrecipients. So you want to make sure those subrecipient contracts have all of the required elements in place. And then the other part of this is ensuring the subrecipient expenditures are reviewed to ensure they're allowable costs. So as I mentioned, a lot of times these places had never received federal funds before. They didn't realize that you can't spend alcohol, or you can't spend money on alcohol, but also in a grant, there may be really specific, here's what you can spend money on, here's what you can't spend money on. So as a county, if you're reviewing those expenditures, just trying to help them out and make sure that when they're submitting for reimbursement, they're not submitting unallowable expenditures that either one will get kicked back when it goes to the grantor, or in some cases, unfortunately, the grantor is not really noticing that until later on, and then it becomes an issue. And I have some more resources from Niles on this.
Yeah, so these ones, question, have any of you ever taken the class that our office puts on in conjunction with WFOA on the federal grant compliance? It's about a 6 to 8 hour training, yeah. So these next resources that relate to the suspension and debarment, relate to some of the findings that we see, came about through that training, because what we found is that those trainings were well attended, and we'd have to put together these handouts for the attendees of the class, and we thought, well, shouldn't everybody have access to something like this? And so last year, we put together a federal awards handbook that puts together from start to finish exactly everything that a person managing a federal grant should know about, again, that whole process. Included in there, of course, are sections on federal procurement, on topics like subrecipient monitoring, reporting, suspension, and debarment, all those individual requirements that are part of just about every federal grant. We put in here with some explanations about what's the process, what's the requirement, and what can you do to produce evidence for these things that you've done them successfully. So I'm not going to go through them because Brad did a pretty good job of explaining what the issue was and what the requirement should have been for each one of these. And I also don't want to steal the thunder from those grant classes and couldn't do them justice anyway. So just check out if you're interested or have a part in doing these checks or for checking that these were done. We do have individual chapters in here, as you can see, for each one of those sections that we find common issues in. And I think Brad did a pretty good job of touching on these. So I'm going to go skip past that one. And here's just 7, from the guide, 7 monitoring requirements. So verify suspension and debarment, communicate that required info to the subrecipient, perform the risk assessment, monitor the activities, verify at the audit completion, consider adjustments, and then enforcement for non-compliance. So we kind of put together the 7 monitoring requirements that's included in that guide. All right, I think one more. I hope that you all do stay attuned to our Audit Connection blog, what we call In the Know in the SAO, that goes out every 2 weeks. Through there, especially during single audit, what we call single audit season, we do try to touch on each one of these individual topics and what we see happening with some of the tips that we think could be helpful. Obviously, a lot of this is like post, right? You've already gone through the awarding process, you've spent the money, and we're coming through with, well, here's some things that you should watch out for. It's never too late to start putting those things in place if you haven't been doing them. So always stay attuned to what we're putting out there. We try to stay topical with the season and the flair of what's going on. You can see here just a hint of some of those articles that we've put together, again, in response to those common audit findings that we see. All right, let's talk about financial statement preparation.
Okay, so I mentioned earlier, so when we have a financial statement issue, it's usually just in one bucket. So it's financial statement preparation. This one's a little bit more difficult because when you're talking, say, subrecipient monitoring, I can give you really specific things. When it comes to financial statement preparation issues, it's across the board. So maybe there's a new GASB that you didn't implement correctly, so we had an issue with it. A lot of times it might be that if we come in and we're trying to tie out, say, the notes to the financial statements and they don't agree to each other. So it's really kind of across the board of what the actual misstatement was. But typically it results from some issue with the financial statement preparation or review. And I think for a lot of you in the room that are actually doing the financial statement preparation, having someone that's doing the review for you is a critical step. And so Niles is going to have, in the next slide, he'll talk about some of the things our office has done, but just some of my advice for you is the more you can do to sort of help them know what they're supposed to do is going to help you out. So when we come in, like when I was back doing the audits, the first thing we're doing is we're ticking and tying the financial statements. So I would go and I'd look at the notes and I'd say, here's this amount. Does that tie to the statements? If it doesn't, then I'm going to talk to you and say, hey, I think we have some issues here. A lot of times it might be you had some last minute changes and they didn't get reflected in the notes. Also, none of us are perfect, right? When I'm doing my job and my supervisor's reviewing it, if you read over something enough times, your brain kind of just sees that it's there even when it isn't. So if you can set up that person and try to get them educated so that they're helping you do your job, so they're going through and doing what we're going to do before we get there and catch those things, it's going to make the audit a lot less painless. And so Niles has some resources now that can help with that.
Yeah, these checklists are they have two roles, or the review process has two roles. One, they should help you all that have to do much of the work or gather the information to then put into the notes or put into the financial statements. So it's helping you remember all those little checks, all those little areas that you should be asking about, integrating, etc. But then it also gives you a little bit of help on the back end to get somebody else involved in the review process to just make sure that you've covered everything. Because like Brad said, although you all may be responsible or have some sort of a higher degree of responsibility over putting the financial statements together, the information isn't all yours. I've talked to a couple of counties in here where it's like, I've got to request information from just about every department, from multiple people in all those departments to try to put everything together to get this thing sound by the deadline for the audit or for the statutory requirement to get the information submitted by May. And so these checklists are supposed to help you in those frantic times make sure that you're pulling everything together, that you're thinking about everything you need to in that chaos that it can be, but also then to get others involved, which I think in talking with many of you throughout the last decade, you're asking for that help a lot. And this could be a way, again, to build into your control process, your preparation process, that somebody else checks your work. Again, it's not necessarily to find issues, but wouldn't you like to find it now, like Brad said, rather than later? Absolutely. But it's also, again, to just share that accountability. Now, it's not just on you. It is on the county, which is true. That's always been true. Is we don't audit a department. We don't audit people. We audit the county as a whole. And so there should be multiple people involved in this. A week or two ago, 3 weeks ago, we did release the newest update for the cash basis financial statement review checklist. We have a couple new things this year. I think those are the three that we've just been seeing lacking a little bit. So it's still got all the great stuff from the previous years, your basics. But we wanted to clarify these three this year that we saw not coming through in many of our financial statement reviews. Not just specifically to counties, but there are here a couple that probably do apply to many of you. So one is landfill liabilities. We still know that there are landfills out there that are not being disclosed or reported. So just be aware that there are specific requirements in what you should be disclosing in your notes about landfills and on your Schedule 9, should you have costs related to those. Also, we've seen a lot of omissions of short-term debt showing up on your schedule of liabilities, your Schedule 9, or in the notes, should you having to be presented there. And the reason why we've been, this is being missed or it's not being presented is, well, it doesn't exist at year end. That seems like that's a zero. Why are we just going to report a zero on our Schedule 9? Well, the schedule requires you to report the changes. So if you did have short-term debt throughout the year, we would expect to see that fluctuation coming in and then going out. Hopefully, such a short-term, that would be the fact that would be going out relatively quickly too. So we're looking into that a little more. Obviously, our auditors review notes or your meeting minutes. We're trying to review your activity, and so we've been just spotting issuances of short-term debt that then we don't find elsewhere, and so then we have questions about it. And then finally, we added a question in here, a checklist item, just to call out that there are some specific awards that need special handling on the CIFA. And although that was already in the BARS manual, it was already, of course, in the compliance supplement, what you should be reporting on your CIFA, all those types of things. We just wanted to point you to that guidance in the BARS manual as a check. Like, have you gone to this section, read the requirements for what needs to be reported on the CIFA and how, just so that you are comfortable with that requirement. All those little exceptions and how to handle it. It's just a checklist item to say, did you check that this year? Do you feel confident about your CIFA? If so, good job. And again, great thing about these is that there's multiple spaces for, did you review it? Did somebody else check that you did it? Do you have any comments or questions? So it's a collaborative process, and that's what we hope this is. Just some other reminders that we see that I thought pertinent to you. Obviously, we have a checklist there for Schedule 6, but we also require it for something like that for all other gov types as well. We just think it's a good practice to get your finances kind of all on one page. We consistently see and want to remind people to take a look at your ending fund balance or cash balance classifications. Our auditors do check those. Again, taking and tying out the values that we see. And so we want to see support for how you're coming up with those calculations. And then again, we're still seeing some inconsistencies with Schedule 9 reporting. So it always helps to start from last year, take a look at what you had outstanding as of last year, and hopefully that's what you're starting with this year on that Schedule 9 or Schedule of Liabilities. We're doing those checks internally and flagging local governments who had something last year and all of a sudden it dropped off for whatever reason. So we're flagging those and having auditors ask about those a little bit more. So although you shouldn't just copy over from last year and make changes, you should still be checking last year's for consistency between years to make sure that it makes sense. For all the GAP counties in here, we do still support the GAP checklist. It acts a little bit differently than the cash basis checklist because that Schedule 1 and the Schedule 9 that all the cash basis governments do, that is your, essentially it's your trial balance. It does kind of get transformed into your financial statements that we do audit. For GAP governments, the checklist is still valuable. We're asking high-level questions about, did you check this? Are you including these disclosures? But I always encourage GAP governments, even if you're not going for the ACFR, use the GFOA's checklist. I think it's a fantastic resource. Obviously, you don't have to use the statistical sections and some of the extra schedules that you might have to put together for that award program if you're not going for it. But just in general, it's a complete checklist. You'll learn a lot having to go through it. I would put any new reviewer, any new staff member that's helping me put together GAP statements on this list, even with zero context or zero training. The descriptions and the fact that you're checking, you're flipping through all those pages of financial statements to tie stuff out, you'll learn a lot about yourself by doing that kind of exercise. So always recommend that as a practice. It could be, part of training day or something. Here, take our financial statements, take this checklist, and have a fun 5 or 6 hours doing this. That's your onboarding. All right, Brad, required risk to assess.
Okay, so for the required risk to assess, basically what this means is we put together a planning guide for every audit area or every entity type. So for counties, everyone knows what a county is, but when the staff first get a job and they're first having to do audit of a county, we have a lot of more in-depth things that the average citizen wouldn't know about, all the complexities about restricted revenues, all the different department types. We also talk to them about what are risks for them to look out for. So when we have a required risk to assess, that essentially means when we do a brainstorm at the end of when we plan an audit, which is going to be the auditor that's in charge of the audit, their supervisor, and then typically the audit manager from that team. So we think these are the most significant risks that at the very least you have to have a conversation and say, should we be looking at it? So the first one, as you can see, it's only related to GAAP government. So there's going to be, if you're doing a cash basis audit, it's easy. You say, this isn't applicable, that's why we're not looking at it. But a lot of times, like with restricted funds, it's going to affect every county. So we want to just make sure they're looking at it. We also have a lot of other risks that are in the planning guide that are just considerations. Maybe this year it's important because of something you saw in the minutes, or you knew there was an issue from the prior audit or that sort of thing. So going into the investment pool reporting, this is just for GAAP. So this is actually for last year, prior to the 24 audits. We have our technical audit support team. They're actually the part of our office that audits our teams. They look at our audits to make sure we're doing our job. They also sometimes take on a special project. So for this, they did a quality control review, and they identified some presentation and disclosure issues for GAAP counties. These are ones that are operating investment pools. So I put there in blue that none of these appear to be material. So why that's important is if we have a material error and that's not corrected, we wouldn't be able to issue an unmodified clean opinion, which is what you're hoping to get. That means we'd have to have you correct that. Being that none of these are material, it gives you a little bit more flexibility. So for last year, your audit team should have been talking to you about these. Most likely, because it was later in the year, you probably didn't correct it, and you said that you were going to correct it this year. So they'll simply just be checking to see if you did correct it. If you did, then you're done with that. I know some counties, if it was a small correction, may have already corrected it last year. If that's the case, then there's nothing you have to do with that. So with the restricted funds, so as I mentioned before, counties receive a lot of different streams of revenues with restrictions. So the risk there is if you have to spend this on certain items, that we're wanting to make sure you did that correctly. So there's a lot of different restricted revenue funds. I just kind of put a few of the more common ones. So we have overhead costs, building permit fees, interfund loans and transfers, and county road funds. So typically how an audit team would do it is we're going to cycle through these. So if I'm looking at planning for one of my audits, maybe we haven't looked at the building permit fees in 3 or 4 audits, so we're going to pull it in this year. Or if we had a specific risk from planning or a prior issue, we might look at it, but they're typically not going to look at all of these each year. So getting into my last area, this is the emerging issues. So I'm going to talk about EFT controls, federal award changes, and the county services project. So EFT controls, so I kind of mentioned at the top in terms of fraud. So unfortunately, this continues to happen. I actually had a city in my area, the city administrator contacted me a couple weeks ago, let me know that unfortunately, even though they did have good policies and procedures in place, the employee got an email where they were asked to change an account code or the account number. They changed that number and they had a loss of about $370,000. It's a smaller city, so this is a pretty good sized loss. What makes it worse is the insurance is not going to reimburse them because they didn't follow the policy they had in place. So every time I'm going out, I'm really trying to emphasize this because I hate having that phone call and talking to people that have losses like that. So usually, so what the external bad actors are trying to do. So the first one is, in my example, changing bank information for a vendor. Also for an employee, they're trying to do that as well. So this one we see a lot where it looks like this employee sent payroll an email. I want to change where my paycheck is being direct deposited. It wasn't actually the employee. A payroll goes through, they come and say, hey, why didn't I get paid this pay period? Then you kind of get that sick to your stomach feeling of something happened here. So we see this one actually pretty frequently. Purchase gift cards. This is the least frequent one. The example I know about is an administrative assistant at a school district. She thought her superintendent had emailed her to ask if she could buy a bunch of gift cards because he said the teachers were doing great this year. Bought these e-gift cards, sent them to the person. It was actually the fraudster. They just used all the gift cards, so the loss happened that way, and then making electronic payments. So what you want to do is, we hope it doesn't happen, but if it does happen, the first thing you want to do, report it to us. Also report it to law enforcement if you feel like it's a situation that warrants that. What we've seen is over 200 loss reports submitted since 2016. So I had just looked at this a couple of weeks ago. We have a place on our website where I get updated statistics on this. So this is from the smallest governments to largest state agencies, and the losses total over $38 million at this point. So as a reminder, you do want to report these right away, but also even if you don't lose money, you are required to report it. Sometimes the good news is it's caught by the bank or by yourself before the money goes out. But we would still want to come in, kind of check your controls, see if there's anything we can give you advice on to help prevent that in the future. So then in terms of the statistics, so it kind of to show you how it breaks out. So you can see the gift cards is quite small compared to the total and the amount that happens. Payroll in terms of the amount, we're at 578,000 versus 37 million, but as you can see, it's happening more frequently, so 123 times. And then the vendor one's the big one, and that one can be really scary because you might have $2 million, $6 million, $10 million at one time. You're paying one company, so it could be a pretty costly mistake. So all of them are really important, but that's the one that I would be the most concerned about tightening your controls if you have any concerns. And you might have the smaller entities coming to you and asking about this. And so any advice you can give them is always helpful. Then another way to look at it is you can kind of see from 2016 to current. Obviously this year we're just into March, so it's only part of the year. The big year was 19 million. So this is in 2019. This is related to state agencies. Since then, it's been pretty consistent in the dollar amount. It did go down last year to 1.4 million when it had been 4 million, 3 million, 2 million. But then when I was looking at the cases are 32 and 32 the last couple of years, which is the highest it's been since that initial larger year in 2019. I think it's because a lot of them have been the payroll, so smaller dollar amount. So continue to be vigilant if you can. And also, like I said, any advice you can give smaller districts when they're calling you, refer them to us. Niles is going to go through some resources we have that you could let them know about as well.
So my wife hates this story, and so I tell it every single time. So about 3 years ago, my wife gets a text from her superintendent, her principal, where she works. And it was a text that said, hey, I'm on my way to the board meeting. We're doing awards for different staff. I'm literally on my way there right now. Can't stop. Can you please purchase gift cards? We need 10 of them. We're recognizing 10 people. I really need you to do this. I didn't know who else to call. Right? Pretty empowering of a request for a staff member to receive from somebody of such authority. A request like that to be needed. That's pretty cool, right? Everybody would feel like a call to action to want to do that. And many people would follow through with that request. Thankfully, one thing saved us. And do you know what that one thing is? Yeah, that's not why she hates the story, but no. So the answer, in my opinion, is training. That's where I'm going to go back to, because the response of, well, did you called the superintendent? Yeah, we did, but we never would have thought of that without training, right? Our office is heavy on being skeptical for phishing attempts, for bad actors, for all these people who are requesting things that just doesn't seem right, and giving us examples of scenarios that feel very real but aren't real. And that training was the only thing that triggered me to say, this seems familiar to me, right? This thing that's happening, it feels like deja vu because of all of the trainings that we've taken as an office. And so we did the right thing. We called the superintendent, said, are you going somewhere? I got this weird text from you. Everything okay? Do you need me? And of course it was like, yeah, I'm at home having dinner. I don't know what's going on. And so we ended up, texting back and forth with this, scammer for the next hour, just having fun with them, but ultimately did not give them any money. But again, it comes down to, like Brad's talking about, what do you do? How do you prevent this from happening? Our best practice is always going to start with, you have to train staff. You have to give them examples of what has happened and what can happen in order for you to avoid these things. In that instance, the bad actor, the scammer, was doing everything that they should have to try to trick somebody. They were putting a level of haste on the transaction. They wanted them to do it fast. They did something emotional. I want to be a good employee. I want to step up. I'm the only one that can do this. That's an emotional connection that a normal human would want to step up and do. We all want to do a good job. We all want to be trusted. Boom, that was an in. And so only with training can you help your staff understand the risks. I know the training isn't necessarily like, your probably main thing that you're worried about, but guess what? That's a financial impact should your staff not be trained. And so whoever you can speak to, whoever you can talk to, if you're not doing this training routinely, annually, or as every part of an employee's onboarding of what can happen, that deals in this realm, that has the ability to process things or has a purchase card or whatever it may be, I think that should be just a required training everybody takes. Brad talks about, gift cards being the smallest, obviously payroll next, and then AP or ACH, whatever it may be, vendor issues as being the third. Anybody have a guess as to why payroll is so much smaller than the vendor issues? Paychecks are smaller, absolutely. And people usually notice, right, if you don't get paid. Yeah, right. And somebody doesn't get paid, they say, well, what's going on? Where'd my paycheck go? There's a little check there. We don't want it to get there. Don't let that be your control. But there's a check. With the vendor issues, yeah, the vendor may not even be expecting a payment, right? They could have just found somebody that you have done business with, and then boom, they're asking for money to be sent to that. They send a fake invoice, whatever it may be, to get.
Can I share just a little bit about that incident that's been on the news? I will just share just a little bit about it. It was very real. It was insurance. And somehow they had gotten into this person's computer system, and so they knew that the insurance payment was coming up soon. And they gave them the sense that they had to do it now, and you have to get that wire out. We need it immediately. And it looked very, very real. Unfortunately, though, they did not follow through with the rest of the policies that they had set in place. But they're getting really, really good. So just be super, super careful.
Yeah, I just had one come through this week. It almost even fooled my IT people.
No, just that one.
I felt like but what caught me was, why is the county administrator coming to me to get something paid? Why would she not follow
I don't care.
procedure
She can do it.
and policies to get something paid, especially if it's right away? And so I
now
sent
Jack's
it
gonna
off
have to do
to
it,
our
though.
IT team, and one came back and he said, well, I opened up the documents, and one was a W-9, another one was an invoice for nearly $7,000.
Why don't we just all come around? This isn't
But when
working.
I'm looking at the invoice, I'm like, why would we be paying for IT services when we already have our own IT? And then he pulled up the person, and the person, it was a real company, real person, all that kind of stuff. And so that also seemed, they're getting very sophisticated. It wasn't until our IT engineer came back and said, no, this actually came from Brazil, and it fooled our spam controls because it thinks it's coming from the US. So they're getting very sophisticated. So I would say, if anything's outside of policy,
Oh, absolutely.
check into it.
Yep. With this will be what was that game show where there is a keyword, or there's a game show where there's like a phrase, passphrase. Is that what it is? I remember seeing it somewhere in a museum or something. So catchphrase, or yeah, so the catchphrase for tomorrow is this word. But what's the other safeguard that's going to save you in these instances, other than training and being aware, being smart to catch on to something that's strange? What's that thing that's going to save you after that or help you? Internal controls. That's a great guess, and technically right. I want something more specific than internal controls. It's an S word. Yes, there it is. Segregation or separation of duties. Because what's going to happen is they're going to want somebody to change some information. They may want you to change some information in your master vendor files, in your employee files, and that person who has the ability to change it should either have somebody that needs to approve those changes, or it shouldn't be the same person that's allowed then to create a warrant or cut a check or whatever it may be to actually send off those payments afterwards. So you got to have those controls in place. Again, there's phases and stages of security fences that you guys have the abilities to put into place to stop these from happening, because they're going to almost squeak through, right? They're going to get through one or two barriers. There should be always those third, fourth, little obstacles for them to get through. And segregation of duties is a fine way to stop that. So all that to say, if you want more reading on best practices, we do have guides for wires and ACH. They both have the same theme. There's different requirements from the banking side for each of these. So we have them split into two separate resources just to keep them clean. But the best practices are very similar. You want segregation of duties. You want strong policies about who's able to send ACHs or send wires, etc. You want those policies to dictate the relationship with the bank. Is there anything at your bank that you can put in place to help you? Best practices to only send ACHs or wires from dedicated accounts that are meant to do those things, so that should somebody have control of your other bank accounts, they're not allowed to just issue one-offs through those little catches will be there too. So again, robust policies. Educate staff on all those social engineering tactics, implement those strong internal controls to limit the chance that an employee can fall victim, and safeguard paid data. Again, the changes to the source files, that just can't be one person that has the authority to do that, but then can also have access to your financial system elsewhere and actually issue payments. Gets a lot trickier for our juniors out there that may have the ability to do this. Maybe there's cities that are a little bit larger that act as their own treasurer that can also fall victim. But obviously, the smaller the entity, the less the ability you have to segregate some of these duties or whatnot. We do not want to see anybody with admin password access to your accounting systems, right? Limit that access so that should they get through to some random staffer, that person isn't allowed to then go in and make changes without going through some approver or authority to say, can we question that? Do we need to research this a little further before we make the changes to the vendor files? Yes, question.
Yeah, that's a question I've got. We're debating in our financial system. Our accounts payable person is the only person that can set up vendors. Okay.
Mm-hmm.
And so if she has those admin permissions, and when everything is being put in by the different departments, and then it flows into AP.
Mm-hmm.
And but they can't set up their own vendors, and we have some that would like to set up their own vendors because they feel more timely or for whatever reason. Of course, they're putting them in wrong and they're doubling them up, and on and on. So we want to control the process, but I'm just curious about how other counties handle this, because we got some people pushing on us, and so far we're retaining that admin function within our office.
Mm-hmm.
And I'm just curious if other counties if they decentralize the setting up of vendors, or if they control the whole thing.
In Kitsap County, they can submit a request for a vendor, and they actually started off in our FMS system, but it requires our AP department to actually create the vendor, and then we have a second person in our AP department that approves it. So we have multiple people that are looking at that.
Which county did you say?
Kitsap County.
You have FMS?
Well, we have Workday, so it's our financial management system is Workday.
Okay, gotcha.
Dog spray, the dog spray.
And I think I can put in a request and I can approve a vendor, but I can't create one, I don't think. So we do have like separate things even on high up that there's stuff I can't do that my AP people can do.
And I'm sure that request is coming with support and documentation for the
Mhm.
vendor that somebody is checking that it's there and.
Yep.
Yep. Yeah. Not just an email that says, please create this.
Last time
Sure.
when I was walking with.
Anybody else want to share real quick? And then I'm going to take a quick break before we finish up the session. Yeah. Oh, Mike. Yeah. Thank you for the people online. Thanks, Ricardo. Yeah, you're good. Thanks.
Adams County, here we go. Okay, we had one recently. Our fair manager was new, and we had a new bid proposal come in for the marketing. And she received an email from the marketing company stating that they had just gone through an audit and they can no longer receive checks. Interesting about it was that their invoice was due in January, and it was mid-January when we got the email. And so she asked me about it, and I'm the chief deputy accountant, and she asked me about it, and I said, well, that would be the work of the treasurer, but I'm pretty sure we don't do ACHs. We go strictly warrants with our vendors. And so let's talk to Sean. So we went upstairs and talked to Sean, and he was reviewing it and saying, no, we can't, but have you reached out to him and find out what it is that we can do to make this work? And so she went back to contact the vendor. And so while she was doing that, we were looking over the email and, well, let's check the website, right? Because it mentioned, the email was really sophisticated because, hey, welcome, Nikki, welcome aboard. We understand you're the new director, and annually we receive this, you'll be receiving this invoice, but we can't do checks. And so they knew about her, they knew about her position, they knew about the timing of the invoice, and they knew the dollar amount of the invoice, what it should be. And so they knew so much about it, and that's why she moved it forward to me. And then when we were looking at it, we went on the website, the treasurer and I went on the website to, are these people the right people? And so we did, and they were. And there were links to their to contact them. And the one person, their account manager that we were looking at, was check her email because it was there. So we did that, and the email was something like ABC Creative Marketing Company, and somewhere in the email that we received, it was Creative Marketings with an S company, one little letter, and it was so small. She had missed it. We almost missed it, and then we said, you need to call these guys. And so she called, and no, we were sending out invoices now. We haven't changed anything. And so we were done with it right then and there, but we caught it. But it was $150,000 that almost, if we would have moved forward with that. But it was very convincing, the email was.
Yeah. Yep. So that's point number 3, 3 on here. You verify the changes if you're skeptical. Go find a source, phone number, whatever you can find online for this person instead of the one that's been sent to you. So yeah.
Perfect. Do we want to take a quick break and then we can pick up right where we left off
Exactly.
too? I
Yep.
mean, you still will have your opportunity to comment or ask questions related to this, but Niles and Brad will continue with our presentation if we just take a brief break, like 10 minutes, get some fresh air and come right back.
Scan through like your contracts and
Okay, let's get started with this final session for today. Looks like everybody's in, so I think we are anxious to hear the rest of your presentation. Thank you.
Okay. All right, so we're going to go through some federal award changes. So Niles had mentioned before, we have an entire class that goes over all of this. So I just got a few highlights from it. The first one that's a big one that it probably doesn't actually affect counties directly is for many, many years, the single audit threshold was 750,000. So this is just the amount of expenditures in any one fiscal year. That's going up to $1 million. So I do know of one small county, I think it might actually help out where they don't have to have a single audit, but it might affect a lot of the people that you pass money through, potentially other people that you're working with. So if someone does ask you, so this is starting with fiscal year 25, so audits we're going to start doing, thresholds going up to $1 million, so it might save someone from having a single audit. The next thing is the type A programs going from 750 to $1 million. So this gets into how we select a program. So if it's a type A program and it's high risk, we have to automatically audit it. A little bit different if it's below that threshold. So it could affect how many programs we audit based on how your CFA lays out. And then a couple of other ones. So equipment. So if it's a grant where equipment is applicable, and it's something we have to look at. It used to be we'd consider anything 5,000 above as equipment. Now it's 10,000, and then unused supplies is going from 5,000 to 10,000. So really, the $1 million was the biggest change in terms of dollar amount. So the next one gets a little bit complicated, but it's the Federal Acquisition Regulations, so the FAR revisions. So these were put into place pretty recently, so October 1, 2025. So a couple ones that I'll go through are the micro purchase threshold. This increased from 10,000 to 15,000. And then the simplified acquisition threshold, or the SAT, is going from 250,000 to 350,000. The big one here is the fact that you have to actually have those documented in your procurement procedures to be able to use those. So you'd want to just make sure and update that so that you can go ahead and start using them. So for micro purchases, essentially what this means is you don't have to do the competitive solicitation when you're making those purchases. You're supposed to have good documentation. Maybe it's based on history, experience, that sort of thing, but you don't actually have to go get official quotes from anyone. As everything, usually when it comes to auditing, we see you have to maintain the documentation. So if someone went out and they maybe went and looked on Amazon and they got some different prices, have a screenshot to say, hey, we saw there was these 3 types of things. We picked the one that was lowest, or you might have a good reason that one of them really had, horrendous reviews. This one had good reviews, that sort of thing. The other part of it is you can use purchase cards to make those purchases, which also saves time. So a lot of these things, it's just going to be a little bit faster process, not having to do the full soliciting in the competitive procurement. So then with the simplified acquisition threshold, so this is for types of business, or this is for purchasing property or services. So it's the same kind of thing where you don't have to go through the full procurement process. So the 3 things the federal government lays out are you have to have, it's based on your internal controls, evaluation of risk, and your documented procurement procedures. So it raises that threshold by $100,000. So if you have your small purchase procedures for this, this is just one area where, again, if you have it in your procedures, you now have a little bit more wiggle room. The other changes, which are pretty minor, but they added veteran-owned businesses as the types of businesses recipients and subrecipients are encouraged to consider. So as you can see, it's not required, but you're encouraged to consider it. So you may have a business in your area that you'd want to consider using if they're a veteran-owned business. Also, they added to the definition of prior approval to clarify it means written approval. So an example of this is when you have a period of performance for a grant. So let's say it's September 1, 25 through April 30, 26. Usually you could only spend the money in that period. maybe the grantor said, we're going to allow you to make a purchase before or after that. They're just saying you'd have to have something in writing. I think people typically did already. They just clarified that. So we'd expect to see a letter or an email or something like that that lets you do that. And then I'm going to hand it back to Niles, and he has some more resources related to this.
And I think this one's just a reminder that, again, this handbook exists for federal awards. Again, handles procurement. It goes through all the different, thresholds, what micro purchases are, when you can use that with federal funds. So that bid guide that I talked about before does cover federal purchases, but not to the depth, of course, as this does. So I think both of them can be used in conjunction. You can see all of the different requirements should you meet these different types of purchases or procurements. And again, we show differences between state and federal law. If you're either combining resources and fall into one of those camps, if you're just using funds from local or state sources, then you know what to follow. But again, super helpful guide to understand all the different requirements if you're spending federal money. Sounds pretty short, Brad.
Okay, so the last area I'm going to talk about is the county services project. So I had hoped that it would be finalized by the time we met this week, but unfortunately it's not quite there. So just as a quick reminder from what it was. So we had some special purpose districts that came to our office when some counties changed their process. So what was happening is some counties offer optional services, and I'll kind of explain the difference between that and required. Those counties made the decision, which they'd have every right to do, to no longer offer those services. Some of those SPDs kind of panicked. They started contacting us asking, well, don't the counties have to do this? Or if a county charged for the services, can they charge us? It got into a lot of different internal conversations at SAO. One of the things the director asked was, well, which counties do this, which counties don't? We really didn't have a centralized location. So myself and a few other people kind of got tasked with, can you go out and get this information? So we met with all 39 counties. So I did half. Cheryl, who's one of my subject matter experts, met with the other half of the counties. We kind of asked you, what are your optional services? Do you provide those? Do you charge for those? Got some information about your processes. And then we wanted to kind of gather that information and see, how that information looks. So the required services are act as treasurer, process warrants, and manage investments. So these are all things by RCW. This isn't always applicable to every SPD. So there's ones where they maybe don't have to use you as the treasurer. So these are only the ones where this would apply. So then for the optional services, there's more than just the three up there, but these are the three most common ones. So a lot of times doing the payroll and benefit processing. So this is where you're actually calculating their payroll for them. You're not just paying the warrants, but you're actually doing that processing for them. General ledger maintenance, budget preparation, you may actually help them with their annual report. There's lots of different things a lot of times counties are helping the SPDs with. So then the next kind of steps in the project was once we got the results, we wanted to make sure we were really vetting it and looking at everything from every angle, make sure we go through legal. So we had meetings with our legal department. Then we met with our Assistant Attorney General, or our AAG, and then they suggested we meet with MRSC. So myself and my supervisor, we had some good meetings with MRSC, as you work with them quite a bit. So we kind of talked to them about, are they getting questions from counties, from SPDs, sort of what are their thoughts on a lot of these topics? What do they see in terms of what the laws are? And also sort of what the resources are that are out there. One of the things that's taken some time, but I hope will provide a pretty good value for all of you, is we've put together an appendix. So the appendix is going to have every entity type. It's going to have the RCW reference and then the requirements to assist counties. And I kind of took a snippet from that just so you can kind of see what this looks like. One of the things that I thought was kind of shocking is there ends up being 101 different types of governments. Now, some of this is, there might be like a city code 1. So some of it might be, it's really just cities, but overall 101. So I thought these were three really good examples. So you can see for a cemetery district, This is going to be just your standard where you have to do those requirements I talked about. So the county treasurer is going to act as the treasurer, disperse funds on warrants that are issued by the county auditor. So that's the one where you'd have to follow the main requirements. And then you can see there, we're providing the specific RCWs for a cemetery district. So if you're curious where we got the information or maybe what else that says, you'll be able to access that. Then the one at the bottom, so a city, that's going to be kind of the opposite. So they can act as their own treasurer. So in that case, they're probably not using you as their treasurer. So that's the different from, where they're having to use you as the treasurer and you have those responsibilities. Then the third one that's in between, kind of an uncommon type of entity. It's a city transportation authority, which is a monorail. But I thought it was a good example where this one, they can act as their own treasurer, and the treasurer is designated by the governing body. So there's something that they actually have to do to determine who the treasurer is. And then I believe it's fire districts, so they're somewhat unique. And I've gotten some questions from fire districts across the state where if they're a certain size of a fire district and they've worked with the county and they've had their commissioners approve a certain resolution, they can actually issue their own warrants. But there's all these steps they have to take. They can't just decide tomorrow we're going to start issuing warrants. And so we understand it's super complicated for all of you. It's honestly, when we're trying to audit it, it's really complicated. So we thought putting this appendix together would be helpful for both sides. So when we put this resource out, you'll have all of this. And if you all, once you see it, if you have things you think that, we could do, we have something that you want to add to it or you think isn't correct, we're very happy to hear all the feedback from it. We just want to make sure it's accurate. So kind of our next step. So we have our final draft. So I wrote the initial draft. It's gone through multiple levels of review. It's now with our legal department, going through everything we have in there, all of the appendix to make sure they feel it's accurate. We're going to then provide all of that to county associations and then to county. So we want to get that feedback on this. Do you think this is accurate? Do you think there's anything that needs to be changed in that? And then some of what we're going to do is we might update the BARS manual. So if there's things that Stacy and her team feels like would be helpful, they'll change that. The planning guides I mentioned, those could be changed. And then also resources. So Niles and his team puts out a lot of great resources. We also have other parts of our office that has resources. So if there's anything related to the project they think would be helpful, they'll do that as well. And then we just would have some, when we go out to do audits, we'd be talking through some of that. All right, I'm going to hand it off to Niles, and he's going to finish out the presentation.
Quick comment on this.
Sure.
I want to congratulate you for attempting to eat this elephant.
Yeah.
I mean, this is a big job with so many variables. When you first put up that slide that said 101, and you had said that you'd contacted 39 counties, I assumed you were going to say that you found out there was 101 ways we were doing it. Because that would be pretty accurate,
Yeah.
and the number might be a little low.
Right.
Okay. But this is a huge project, and it's going to be an excellent resource. Because the reason why I'm saying this is because many counties are under financial stress right now. And so everybody's going to be looking to lean out their processes, and if they can do less, they're going to do less
Right.
at the county level. And so that's where it's going to translate. And here they're going to be contacting these districts and saying, we no longer have the horses to do all this for you. And that's going to be the dynamic. So this is timely. Thank you.
Yeah, absolutely.
All right. So let's see. I'm going to take us home. I'm going to leave a little bit of time at the end for questions, but the rest of this is just me sharing some other places to find ways to get help outside of the audit process. So obviously Brad and all of the audit teams are out there helping you out, provide recommendations, give you guys some input during the audit. There's a lot of ways outside there that you can engage with our office to get some additional help, if not just for your team, for the rest of the county too. So first of all, this is scannable, obviously QR code. If you haven't seen one of those before, you can scan it with your phone. And that will take you to our website to sign up for that newsletter if you are not already signed up for it. We send it out every other week, and it just contains all the updates from our office, as well as places like MRSC, WSACA, other places that are publishing news and information. We try to share theirs as well as it becomes topical. My favorite part about that is that it just takes you to a blank form that you can use to fill out. Doesn't have to be your name. Could be somebody you work with. Could be somebody that you want to stay in tuned to all the things that are going on with our office. Put their name and email in here. We appreciate it. So feel free to do that.
Niles, I want to make sure that that's not a phishing attempt. I just had that in my training.
Yeah, good job with the training. Yeah. You can trust us.
But we should verify.
You can also go to directly to our website and find this as well, which is the safest way to do it. You're right. All right. So I mentioned in my introduction that I reign from a team called the Center for Government Innovation, and we are a separate, so we are a non-audit team, a separate division within the state auditor's office that is just devoted to finding ways to help local governments, what I'll call in the off season. And we do it through, I'll say like 5 or 6 main services that you are able to access free anytime. And I do mean free because we are not funded as part of the audit costs. We are actually funded through a voter approved initiative that got passed a decade or 2 ago that also funds our performance audit team. And so we are truly out here operating just to find ways to help out. So feel free to reach out at any time for any one of these services. So I'm just going to jump through these real quick and share them. So first of all, if at any time, and the way that I'll phrase our lean or process improvement services is if you close your eyes, and everybody maybe do this with me right now. So close your eyes and jump back to your office and imagine and try to imagine maybe any process of yours that just bugs you. Okay, open your eyes. Did you think of something? Do you have anything in your current work life that bugs you, that takes too long, doesn't work as well as you'd like, produces a lot of errors, needs too many reviews to get done? If there's anything frustrating like that, that's my solution to those problems. We actually have folks that will go boots on the ground to the county and help your team, any number of teams, break down that process that isn't working for you and help you rebuild it, or find adjustments to it so that it works better for you, works better for the people that you have to deliver any of these products that are coming out of this process for. And so that's what these lean services are. We work with you to try to find that perfect thing that you guys can work on. I know we've come out to a number of your counties, maybe not directly with your team in your office. A lot of times we work with permitting or the courts or whatnot to work on their processes. So again, if you did have kind of a nightmare flashback to something and you want it fixed, give us a call and see if that's something that we can help you with. That's one of those things that we like to do. It's also another reason where if you do hear the auditors are here, and it's not during your audit, it could just be us. We're not auditors, but somebody might say that, because we're from the auditor's office. So don't be too scared if you do hear that said, in January or February. It could just be us helping out. We also offer team building workshops. So I think we've worked with a number of counties too. Is anybody in here engaged with our team building? Yeah. So we can help you gather your team up and understand your individual strengths and how to use them in the workplace. We do it, we walk the talk in SAO. Brad, we've all gone through the strength finders training and have our own and actively practice them. So at every monthly or bi-monthly team meeting of ours, we share them, we practice them, we put ourselves in scenarios and actually work with them. And I think it's a beneficial thing for teams to know exactly kind of like how you work and then help other people work that way. We also have cybersecurity services. So we were talking about those cyber bad actors, and we have a number of ways that we help local governments for free understand where their cybersecurity program is. One of them is a cyber checkup, which is a really light, usually done in about a week or two, way to assess a cybersecurity program. What your policies look like, what your training looks like, what your basic email controls look like to filter out some of those places that are coming from, areas that you're not expecting emails from, etc. Yeah, question, comment.
How far booked out are you on the cyber piece?
So with the cyber checkups, the kind of like the assessment, as soon as you're ready, within a week or two, we can come out and provide that response back to you in our assessment. We do have sort of larger scale cybersecurity audits that take a large amount of time, a few months to get done. Those we're still booking out 2 years or so. So yeah. We also just started, which may actually, I talk about cyber a lot with finance folks, and we're all part of the cyber universe, but a lot of times you're not in direct control of that area. But we're also starting incident response planning workshops as well, which do ultimately impact members of finance. So imagine a cyber attack, some sort of system goes down, and that includes your systems. How do you respond? How do you assist with IT in getting that data back up and running the quickest possible? And so our workshops actually gather you with your IT department, with county management, with other members of your county to see how you could respond better with a plan should something happen. We've got FIT. Many of you are well aware of FIT and all the data that you submit to us. We turn around and publish online for the public. So that's the first time you're hearing about that. Congratulations, your data's out there. But it's the data that you're giving us. It's public data, nothing more than that. And I'll show you a little bit about some things about how to use that. I talked a lot today about our best practices and guides. Those are found in our resource library. And if you just have questions about your control systems, you can always reach out to us directly about any of the things that are in our best practices. So if you want to talk about EFT controls, you can email us there and we can have a good conversation about that with the person who wrote the guide. All right. What am I doing? Perfect. So again, I'm just going to run through these really quick. Lean, help you remove friction, help you run more efficiently, give you some action items that you can do right away to improve your services. So here's some recent county projects that we engage with. The grant administration process, records management. A lot of people are going from paper to digital in different ways. We've helped several cities and counties, larger organizations, make that transfer a little bit easier. We had, I never name names, but we've gone out and found storage closets, rooms filled with paper records, and they're like, you've got to help us. We don't know what to do. This is like a tidal wave of stuff that we need to get through in order to get to the other side, which is digital. So again, I'm trying to stimulate those thoughts of processes that could need improving within the county. Onboarding processes, actual financial processes. So we've helped with reconciliations, we've helped with payroll processes, AP, all of those individual things where it's how can we turn around these things faster or more with less errors. We've helped counties out with those, credit card administration, etc. I'm going to talk about some of these tomorrow. So this is going to be kind of a stay tuned for some of these other areas that I'm going to talk about. So I know that y'all be here, and I can't wait for you to join me on a talk about internal controls and segregation of duties on a deep level on all these things that you guys are involved with. The one that I'm going to skip to is this one, because I'm not going to talk about this one tomorrow. So I love showing up to these places because I see a parking lot filled with vehicles with your fancy logos on the side. And some of those vehicles, I know that folks in the county do take home. They need them for emergencies, for service calls, for things right away. Stacy and Olivia this morning talked about capital assets and the recording of them and kind of the accounting behind them. There's a whole other world that happens after you successfully account for capital assets, which is managing them, keeping them maintenance free, keeping the replacement schedules on track, all of that. And that goes for fleet vehicles and take-home vehicles too. We've seen several issues in the accountability audit world with take-home vehicles being misused or just not tracked appropriately to understand if they're being misused or not, right? You should have some level of awareness over your assets at any given time throughout the year. And this is an area that we've seen increased risk in and issues in because the vehicle's gone. How do you know that those are being used appropriately when you don't physically see them all of the time like you may IT equipment or other things like that? We have a specific best practice on this that's fantastic. It always starts with the policy. How do you define who gets these vehicles? How do you actually assign them out? How do you label them? How do you tag them? Do all of your vehicles show that they're county property, which limits the use? If I see a county property vehicle at, Snoqualmie Pass and they've got skis on the top, I might think, well, I'm hoping they're doing some sort of inspection somewhere up high on the mountain that they needed to take the vehicle up. But again, it's all these little small things that you're doing that should be in policy that helps ID when assets are being misused. King County in the room? They may be on the call. We looked into county policy across the state, and King County had some great information in their policy, which actually requires sort of a quota for uses out of their take-home vehicles or these fleet vehicles. So, for example, if somebody thought that they were justified to have a vehicle but didn't use it for the mileage or for the use that they justified that vehicle to be used for, let's say, 100 miles a month or something that person should have been using to use it for, but didn't meet that quota, then maybe it's time to reassign that vehicle to somebody else or to shift it to just a rental, or you check it out instead of having it be yours all the time. So there's some great best practices out there in other policies. We've tried to integrate kind of the best of into our take-home vehicle guide. Again, it should be backed with actual data, just like the use of other assets. Every year or so, you should be checking to see, is our listing still right? Is the assignments of all these still right? Or do we need to make some changes to either policy or how these assets are being used? Who took a fleet vehicle here today? Yeah, nice. I'm watching you. No, I'm just kidding. All right, so here's that smart thresholds that we have in here. So establish proper minimums, impose mileage limits, review short-term authorizations, keep track of those assignments and the records that folks are using. And again, you got to have good documentation to support their use, to then support decisions about their future use from then on out. So, like I said, all of these things that we talked about today and more can be found in our resource library online. All right, and the final plug that I'll give is our financial intelligence tool, another service that our team supports here at SAO. Everyone's going to raise their hand, I hope. Everybody's seen, heard of, or used this before, right? Yeah. So for those that haven't, those that may be new, you submit your financial data to us every single year by May 30th. Thank you very much. And we, in turn, have a responsibility to push that information back out to the public so that they can use it for whatever purposes they would like to. We have pretty big users. Obviously, the legislature is very interested in all this data, but we also have educational institutions. There's universities that use it. We found it pop up in interesting social studies that are published in journals, or other educational studies that are published on university websites using your data, which is, in my opinion, pretty cool that people care that much about your Schedule I information to go out and make pretty cool recommendations on. But that's what it's for. It's a place that you can go to look at your information as well as everybody else's, because y'all know your data better than anybody else, but you might not know what the county next door is doing or how they're accounting for things or what they're receiving or spending compared to you. And so that's just the power of having it all in one place, is you can actually compare side by side your county's activities to the ones that you think are your peers, your friends, your rivals, whatever you may have in the county environment. You can put your side by side and really see how you're doing compared to the rest when it comes to, again, your Schedule I information that you're sending, your revenues, your expenditures, etc. So here's an example of just all the counties ranked by taxes. Pretty easy to see who's collecting the most and not. You can go down to the individual bars account that you're reporting and seeing who's collecting that type of revenue. We've heard a lot of people will use it for that way. They want to see who's collecting, you know, the forest timber tax, how much they're collecting, what that relationship looks like. So it's an easy way to find who else is doing this thing without just picking up the phone and calling everybody. Or I don't know if you're all in a group chat or something like that. That'd be pretty cool too. I chose Adams County just because it starts with an A. I always choose Aberdeen when I go to cities because it's an A. I'm not picking on Heidi here. FIT was obviously based on the financial health when we first started it. That was always the core of the system, was managing just some basic metrics about financial health. And so here's just an image of one example of cash balance efficiency, which measures the amount of days left of cash you have on hand to use for spending. Obviously, the benchmark is down that red dotted line for 60 days. And it looks like Adams County is above that. So that's great.
So I present this information as part of my annual report review prior to submission. And one of the things that always gives my board a false sense of security is we have a lot of managerial funds that we roll up into the general fund. So the general fund ending fund balance is always significantly larger than it really is. That and the fact that our reserve is an kind of an unrestricted reserve because it's a rainy day fund. So then it looks like we have an additional 1.9 million, when I really just want them to look at the general fund operating account. And so, I mean, that's hard. Do you have any suggestions on that? Because they're always like, oh, and I'm like, no, look at the next slide. This is all of the funds that are being reported with the general fund. And they're like, why? You know, all of this, even though some are restricted, ending fund balance, some are not.
Yeah, you're noticing both a strength, but then that challenging opportunity of the bar system, which is you report all of those funds that are managerial into another fund, whether that be a special revenue fund or a general fund. And so sadly, we don't allow the comparability down to that level using it. What I can say would be a little bit of work, but it could be an option, is we do have the ratios right for all this information that's exportable to Excel. So if you're looking at this, for example, for your general fund, that is exportable to Excel. You can always then just replace the all general fund totals that you have with the totals of just your true, in your mind, general fund to show a different version of this same report. But you know, so I would say the summary of that is you can use our ratios to show, put them against the funds that you would like them to see. Because we do publish the ratios on here as well.
Yeah, and I've done that. I've given them the Excel spreadsheet showing historical numbers
Yeah.
from year to year. And it's just not as pretty as that, so their eyes aren't drawn to it.
Yeah.
But my main point will be to kind of educate them every year on this is not all spendable money.
Yeah. Anybody else share this with their auditing committee or county committee or board?
I've actually used it to look up governments when I got a job offer.
There we go. I love that because I always joke, and it's not really a joke because I do it, but if I'm like traveling through the state and I drive by some fire district and it's like, you know, Adams County Fire District number 3, I'm like, who are they? I pull them up on FIT and I can see exactly how big they are, what, you know, how much revenue they bring in, etc. So again, it's sort of a joke, but I also do it. So it's just me nerding out a little bit whenever I'm somewhere. Also could be a good training onboarding option for somebody. Get to know our government, take a look at this and compare it to whoever else.
The other thing I was going to say, the way we've used it is we actually used to use a public-facing portal called OpenGov, and we had trouble getting it to play nicely with our system, so we abandoned it. But you know, we've had public outreach for information, and oftentimes we will send people out to the FIT tool if they want to do kind of a deeper dive into some of our funds. That it's pretty user-friendly, and actually the feedback from the public up in our county has been pretty favorable. It doesn't answer all the questions. Certainly, we're going to be deploying a new tool that is going to be much more robust than this when we move to our new system. But it has, I think, helped intercept some public records requests before they started. So
Yeah. I did not pay that man. All right. Just a few reminders. So with counties, I think a little bit like Brad was saying, we do take a look at all local governments that submit data to us and run some checks against. So we're running tests. We kind of know what to expect when we get your Schedule 1 data submitted to us, and then we start looking for outliers. For GAP governments, we're checking Schedule 1, internally, just because we're curious about this against submitted financial statements, things like that. And so just remember that the information that's in there is your information. We don't change it. We don't doctor it up. We just publish it as you've submitted it to us. So we always say, if you see something wrong, and we do get that request sometimes from local governments to say, hey, this doesn't look right. How do we fix it? We basically turn it back around and say, resubmit your Schedule 1. That's the ticket to getting anything updated in FIT. I always recommend, obviously, cash basis. Your Schedule 1 is going to be a one-to-one reflection. It's in large part a Schedule 1 reporting portal for GAP counties in here on the call. There's some real easy ways just to do a high-level check to make sure that Schedule 1 information is tying to your financial statements. They should all be derived from the same underlying records, and so we'd expect that they tie. And so there's some pretty quick ways to do that. And if you'd like to know, those ways, we can share some tools with you to make that happen. All right. So with that, we've got a minute or a few. Any questions for either Brad or I about what we've talked about today?
I had a question. You guys provide a lot of great free resources and training, but one that I was specifically looking for recently was your former fraud training. Now, we give it from the auditor's office, we give it at least once a year, but it's really nice to bring in the big guns because I think they're tired of listening to me. It's like I can't get their attention. So is that something you guys are going to bring back, or is it gone?
And when you say fraud training, are you saying in like an individual at your county, an actual training? I don't have an answer for you if it's necessarily gone or not. What we've turned it into, I think, is going out to a lot of the conferences and doing a version of it. Sometimes it's every other year or whatnot. And so I would say if you're that passionate about it, you want it back, reach out to us and we'll see what we can do. It's not a reoccurring offering that we have or a service, but we do try to find ways to accommodate training requests.
Is Debbie not there anymore?
What's that?
Debbie Pennick, is she not there anymore?
Oh, she's there. Yeah.
I just contacted her directly and she came out.
Yeah.
Debbie recently did the great team building training. Wonderful.
Yeah.
But I'm talking about my staff are on this training. I'm talking about our AP users across the county.
Yeah.
Particularly Public Works and some of those.
I went as far as I brought.
Well, yeah.
Really?
Let me.
Okay.
So
Thank
we
you.
do. So our team will have been doing what we call fraud prevention / internal control workshops, and they're about 3 hours long. And we've been doing them at counties and hosting both your staff as well as other local governments in your area that want to come. So your juniors, your cities, things like that, to come and learn about the basics of internal control, segregation of duties, and the fraud risks that happen when they're not in place. So that's very much an ongoing training that we are happy to accommodate. I think we've gone out to 9 or 10, 11 counties so far and done sort of regional workshops. But we do like to, we like to encourage the attendance of all of those in your area because, like I've been hearing discussed, a lot of your juniors also have those problems in, not changing vendor information or submitting fraudulent payments and things like that. And so we like to get all of those folks to get in the same room and learn together. So reach out. Yeah, absolutely. Yeah.
We'd be happy to host in Olympia for all the counties if other counties wanted to join. I love that idea. But I can see the economy of scale of bringing people together. And I was sitting here thinking, well, you could do it virtually, but sometimes I don't think that's the same. Yeah.
We specifically struggle with the participation from other departments, like getting them to realize how important the procedures are and attending. We had to put it in county policy just so that they would make sure that a designee was at our user group meetings for the training because they didn't think it was important. So.
Do you think Olympia would be too far to travel? You think? Okay. Okay.
Well, yeah, and go ahead.
We just had a meeting with my chief accountant. We're going to put this together internally. And so we're going to make it kind of a party. We're going to provide lunch. So it's going to be a workshop type of a setting for everybody that puts into AP, throughout all the departments. Yeah. It's going to be a working lunch.
Yeah.
It's going to be a working lunch.
Brad can, plug your ears, Brad. Yeah. So again, if you're interested in one of those regional workshops where we talk about internal controls and how they help to prevent fraud, reach out to our team and we can keep organizing those for you. Yeah. Yeah.
I have a different question on a different topic. So going back to single audits, you had talked about that if the state has tighter policies than the federal government, we have to follow the state guidelines, right? State policies. Is that true for subrecipients as well?
Yeah, so if the state is more restrictive, like you're saying, then they'd have to follow that. Like if the thresholds were higher for state than the federal, it depends on what the funding is, though. So if the subrecipient, sometimes they might be a nonprofit, so it kind of depends on what they are. But typically, yeah, if you're talking for a county, for sure, then you're federal, state, or your local policy. But you want to, whatever's the most restrictive, you'd have to follow.
So is that something you could put in a contract for a subrecipient? I'm thinking back on all the COVID money, and we had some issues. They would go to CFR 200, but which of course was so loose. And I'm just thinking for future,
you could put it in the contract to say, the expectation of what they should be doing, so that it's really clear to them. Because a lot of times, like I was saying, they don't understand what federal regulations are. They're not used to spending federal money. So the more you can make it clear as to what they should be following, because maybe the county understands what they're supposed to be following, then you could put it in there and make sure that they understand that.
So we have the authority to do that.
Yeah.
Okay, thank you.
Any other questions?
Anybody have any other questions? This was great. Thank you so much.
All right. Thank you, everyone.
And I grabbed the wrong thing. So let's have a big round of applause for Niles and Brad with all of the wonderful information they gave us today. Before we let you go, we just have a few quick reminders. First, we have a special break with refreshments set up with. Why am I at the door? 4:55. No, never mind. We're going to dinner. Our networking. Oh, it said we had another snack.
I think
I'm like,
Heidi's already been
I'm
to
going
the
to knock
reception
Carolyn down
area.
to get there. Okay, you go first, Carolyn.
Okay, so our networking reception, Heidi's already tested it out, starts at 5:30 and dinner will follow at 6. Both are in the same room. If you're at the podium, it's on your right-hand side. If you are in the audience, it's on your left-hand side, room next door to us.
Where the Diet Pepsi was.
This is a great chance to unwind, connect with colleagues, and keep the conversations going from today's sessions. And I'm going to touch base with you, Mary, because I'm going to tap onto that last conversation. We hope to see everybody there, though.
You bet. A CPE reminder, if you're attending in person and you need CPE credit, please make sure you stop at the registration table and sign out before you leave for the evening. You'll need to do this at the beginning and the end of each day so you get your CPE. That's really important. Come December, you will thank me.
One more thing.
virtual attendees. Sorry, I didn't
go
say.
ahead.
And you don't need to do anything now virtual. You'll receive a link at the end of the conference. So hang tight.
So one more thing, we apologize. We learned of this as we were all checking in. We're learning about the water shutoff tonight. So for those of you that are staying on site, there will be a water shutdown tonight beginning at 11 p.m., lasting till 4 a.m.
No night showers.
Yes, do your bathing tonight,
no,
please.
no.
That means no hot or cold water.
Pour a glass of
service
water before bed.
throughout the entire evening. We know it's not, and we're sorry for the inconvenience. If you'd like more information, please stop by the front desk.
Or drink wine. Oh, on a much better note, they told me, I swear when I checked in, they said it'll only be from 11 to 11:05, just a quick little switch over. And then I read this, I'm like, oh my gosh. I mean, luckily, hopefully we'll all be asleep by then. But anyway, on a much better note, thank you all for a fantastic first afternoon. Enjoy the reception, enjoy dinner, and we will see you bright and early tomorrow morning. There is bacon for breakfast.
Yay, thank you, Derek.
Those of you attending your first auditors conference, this is a big deal. This is a deal.